All right. Yo, what is up for y'all on the YouTube replay? It's a bit of a red day today, and the market is tanking right now. Actually, let me share with you this right here. If you look at the QQQ, they're down 1.6. The SPY's down 1.25 on, again, some more escalating China tariff tensions. The tariffs are back apparently. But let me give you a quick portfolio update, and I have some major changes. Like, I have some really good news. I made some major changes to my never sell portfolio. I'll get into that in a minute here, so don't go anywhere. But check this out. Here's our Robinhood portfolio. We are down 0.81% on the day. Only stock green is defensive McDonald's, and even then, they're just barely green. But McDonald's is doing its job. Remember to have a diversified portfolio. Yeah, someone said what happened in the past hour. Yeah, basically escalating China tariffs. Hey, what up, Ant? Yeah, I did see the tweet or the Truth Social thing. He was not too happy. And here's our Roth IRA. Our Roth IRA is down 2% on the day. Still, actually, it's not the end of the world. Like, I'm actually ready for a little dip. I'm actually ready to buy some stocks. And I did today. I bought 2 new stocks. But yeah, if we go to year to date, not as bad as this original tariff dip. The market does care about tariffs. Actually, more importantly, the market cares about earnings. And the market's really afraid that tariffs will affect earnings. But at the end of the day, market cares about EPS and earnings, and they're scared tariffs will hurt it. But anyway, I can't wait to share with you the 2 new stocks I bought today. But let me share with you my Webull portfolio. We are down 3% on the day. Here's our total lifetime return. Total return, we are up 21% on the day. But check this out. AMD's down 6, UiPath 6, Robinhood 5, Futu 5, Reddit 3. I mean, all our good stocks, Super Micro's down 5. All the really risk-on names are doing bad. Of course, our one defensive commodity name, Calmain, is still green on the day. But yeah, not great, AMD. But actually, AMD's had a pretty nice month. So, yeah, what's going on today? Yeah, the escalating China tariffs. But I can't wait to share with you guys. What's up, everyone? What up, Looney? What up, Ravoon? I can't wait to share with you the new stock. 2 new stocks I bought for the first time ever in this portfolio. I've made some major changes. Check this out. So these are the 2 new stocks I bought. The first stock is ticker symbol RACE. This is Ferrari. 80% of the business is their car business, but then 20% is the sponsorship revenue they receive. People that want to sponsor their logos and the races. And they pay a lot of people like AMD pay a lot of money to be sponsored on Ferrari cars because most of the time high net worth individuals are the ones that are seeing that, like the most valuable form of advertising. So we'll talk about Ferrari a little later. I'm not just buying them because they're on a dip. Well, that's part of it. But I'm buying them because this is a fundamentally good company. I love their numbers. I love the dividend. I love the share buyback program. I just like the business model. And Ferrari customers aren't really prone to tariffs and inflation like your average person is, So that's Ferrari. I'm a believer right now, more millionaires are being made more than ever before. But maybe a few billionaires lost their millionaire status today with the Qs tanking 1.7%. But you know what I mean? Like, even your average janitor at Nvidia with stock-based comp is now a millionaire. So there's more millionaires being made than ever. So I'm buying some Ferrari stock. I am already down 4% on the position. And the other new stock I bought today was ticker symbol Murphy, MUSA. Now, to do this, I sold out of DocuSign. So I did sell DocuSign and I did sell Perion. They were only $600-700 positions, but yeah, I did sell those 2 to buy and replace them with these 2 quality stocks. So yeah, that's what I bought today. FIX for the win, dude, for real. They're actually up on the day. That actually says something. This is an HVAC company, heating, ventilation, air conditioning, and Qs are tanking 1.7, but Comfort Systems is up. Same like Coca-Cola Consolidated, McDonald's was up. Our new oil play, Murphy's up. Hey, what up? Ademics, what up, Jerome? My VO is hurting today. Hey, it's had a great year though. It's had multiple abnormally high performing years. What up from Jamaica? Hey, what up, AI Reed? How's it going, man? I'm a DCA to QQQM. Yeah, if you're looking for a good ETF to buy on the dip, like gold standard for you want to own this high quality ETF, this is the exact same thing as the QQQ, but with the lower expense ratio. This is QQQM. For every $1,000 you put in, you save $15 in expense ratio fees versus QQQ. I can't stress this enough. It's literally The exact same thing. There's no reason you'd ever buy QQQ over QQQM. It's just marketing. They've marketed that QQQ. They of course, they don't promote this one because they make less money, but it's the exact same NASDAQ 100 strategy run by Invesco, both run by Invesco by the same people, just with the lower fee. All right, I see some people say APLD. Yeah, let's do it. What up, Finn? So APLD, this is actually a big NVIDIA company. So if we go to the NVIDIA portfolio right here, NVIDIA owns a bunch of individual companies. You know, they own a lot of CoreWeave. Hold on here. There we go. So they own CoreWeave, APLD, ARM. So let's see. Wow. APLD's up 20% of the day. There must be some sort of good news. Let's see. APLD reports Q1 revenue of 61 million, signs 11 billion in data center leases. Wow. Microsoft forecast data center okay, so they reported earnings, I'm guessing, or they gave some kind of company update. That's great news. That's great news. So I can totally see why they're momentuming higher on good fundamentals. Hey, what up, Takosa? How's it going? So this is a data center hosting company. I think it used to. They changed it. Yeah, data center hosting business. I think they also had like this cloud revenue. Oh yeah, look, this was back a while ago. It was 10% of the revenue. And then as we go on, it grew to like a bigger portion of their business. But anyway, here were the actual numbers. Let me pull this up. So I don't know if they just reported this if they reported this today or if this was last quarter report. But anyway, the analyst expected 45 million of revenue, and they reported 64. So that explains why they were doing good before today. Like they were at a 52-week high before today because like they've been beating on numbers. NVIDIA owns them. NVIDIA got them a huge partnership with CoreWeave because NVIDIA owns both CoreWeave and APLD. So it's pretty interesting. What's this? Yeah, hey, if you want to get this app I'm on, by the way, this is a brokerage where you buy stocks on. It's in the link tree in my bio, first link there. Let me get my tea. Hey, what up? So let me get my ginger tea here. Market's making me cough. It's a Bitcoin. Oh, it was. Yeah. Hey, Photo. They converted, I think, into like a data center company with their RAM. That is the right thing to do. He said, put a couple hundred in AMD, NVIDIA, VOO. I would, instead of QQQ, I would buy QQQM. MSTR down? Yeah, I bet. Let's look at UiPath, dude. MSTR is literally just a company that owns a bunch of Bitcoin. Check this out right here. All you really look at for this company is their balance sheet, because if you go to their cash from investing activities, every quarter, and my Wi-Fi is slow today, that's good, but every quarter, they literally, this one was a crazy, like the Ponzi worked like good. Like right here, they diluted the shareholder. They literally issued $18 billion of shares and bought $18 billion worth of Bitcoin. And that Bitcoin is now up like 30%. So it works great in a bull market. These assets are the Bitcoin that they own. That's how their assets literally went from 8 billion to 64 billion. They've been issuing shares and it's worked. And every time they buy Bitcoin, it pumps the price of Bitcoin up, which makes them able to go issue more shares. I would love to work for that company. It's really easy. Well, yeah, hey, if you want to get, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, first link there. Anything nuclear. Hey, the best nuclear stock, I think it's slightly green today. Let me go check. Is CEG. Look at that. Pretty much all-time highs. Congrats if you own this company. I would, if you're looking for like the best nuclear stock of all time, it's this one. Out of all the nuclear reactors in the U.S., this company literally owns 30% plus of them. There's no close second. Like Consolidated Energy secures AI data center deals. Yeah, they also have a big deal with Microsoft. They literally have one nuclear reactor to power one Microsoft data center that comes online in like a year or less. But anyway, this is the purest play for nuclear, and they're not just like a company with no revenues. Like if you look at SMR, less than 50 million of annual revenue. Oklo's a revenue-less startup. See, here's the thing. This one makes good money. Look at that net income. And they pay a dividend and do share buybacks. Like, it's crazy. But the small modular reactors like Oklo, I don't love this part of nuclear. This is the one that momentum's the most, though. So the momentum's worked. But I'm not, again, if you look in the top right, the numbers explain why I wouldn't buy this one. It's a $23 billion company in the top right. Again, it's a startup. If you go to the revenue, it says no data because they've never sold anything. And they're working on these small modular reactors. But did you know there's only 3 SMR small modular reactors in the world? And none of them are in the US. And there's no like, they're not going to make revenue for at least like another year. So, or plus, so I can't trust that. I like CEG. If I'm going to buy Oklo at all-time high, I'd much rather buy CEG at all-time highs. And full disclosure, I do own them. Yeah, dang. Are the Qs at least put in the bottom? Kinda. All right, we'll come check on that in a second. But full disclosure, CEG is my largest holding in here, and they just went green on the day. No way, 0.28%. So, yeah, best nuclear play out there. UiPath, let's do it, Jimbo. Another one that I am down. Actually, I'm not down too bad on them because I used to be down a lot more before the past week here. But yeah, I've owned this stock for many years, like nearly 4 years now. What happened right here, the CEO quit out of nowhere. It was basically a cash grab. Didn't look great, but it's good to see them recover most of that with their new AI partnerships. I'm kind of trying to get out of UiPath. I'm still trying to work out if they have a moat. So let's see. Time names UiPath platform among best inventions of 2025. That's crazy. Gardner names. Okay, there was a lot of partnerships. Yeah, right here. They partnered with OpenAI, Nvidia, and Snowflake, Google Gemini. So there was a lot of good partnerships helping out their software. But I wonder if they're partnering them because they don't have too much of a moat and they kind of have to. Overall, it's a good news. The stock loved that. They're still not making. They're just now getting pretty much net income positive. Like, it's still a little choppy, but it should hopefully get more consistent. I'm still studying this one. I don't love it. I don't love it. Oh, by the way, I did buy 2 new stocks today. I'm about to make a YouTube video about this. MUSA, I bought all my shares today. And also Ferrari, ticker symbol RACE. Or actually, I technically bought it late yesterday. But yeah, we're already down basically 5% on our Ferrari shares. But I'm looking, I only started with 2. I wanted to be patient, dollar cost average, especially in this market with valuation still a little high. I eventually want to make this like a 3 or 4 times higher position, but I'm being patient starting out with 2. Hey, what up, Louie? What software are you using? Oh yeah, hey, let me put this for the yeah, hey, if you're on the YouTube stream, it's in the link in the description if you want to get this app. It's a brokerage, by the way, where you get stocks on. If you're on TikTok and want to get this app, it's in the link tree in my bio, first link there. So, all right. Yeah, you're right, everything's down. Check out Southern Company. They have several. You're right, Rooster. I love Southern Company because they also own Georgia Power and Light. They have some like irreplaceable assets. I mean, technically, like every utility is a local monopoly, but this is one of the better ones. And not only do you get this amazing stock price appreciation, but this company has an insane 3% dividend yield. That's what's so cool about the utilities. Actually, we were talking about CEG. I think they're worth nearly the exact same amount. So here's a good way to just get exposure to the whole industry. Ticker symbol VPU. These regulated utilities, even if they don't get us like, they're not allowed to get more than like a 6% return or like a 7% return, whatever the local government allows. But if they don't get a 6% return on their money, the government guarantees them that money, which is kind of cool. So these regulated utilities have stable CAG, like just constantly CAGR, like 6 to 8% a year, just consistently. And you can just buy the VPU ETF. You get the nice dividends too, 2.5% yield that grows every year. And here are the top ones by market cap. Yeah, Southern Company and Constellation Energy. And then of course, Next Air Energy, but Constellation Energy and Southern Company are neck and neck in terms of market cap. They're both great. Hey, what up, Joe? What's going on today? Yeah, more tariff escalation. All right. I told you MUSA 250. Hey, what up, big mans? You know what, dude? This is a great company, but you got it at 250. Yo, I love this stock fundamentally. You know what? They're in the oil and gas industry, and this is why the stock is struggling. If we go to their sales right now, it's down 8% year over year. So that totally explains why the stock is on a dip. But if you just go to like your average, oil stock, Chevron, we go to their revenue, it's down 11% year over year. It's because of the price of oil is falling, but this one's a little different because they also own like the convenience stores. And the best part about this company is their share buyback program and their dividend growth. You get a 0.5% dividend yield and the payout ratio is only 7.4%. Just to put that into perspective for you, and this is real, they actually are expanding their margins. Check this out. I'll go back to this in a second here. Maybe it doesn't want to load the gross margins, but anyway, net income, right? Really, I might have to reset this app really quickly, or the streaming thing. But look at the gross margins. The gross margins actually expanded year over year. But check this out. In the most recent quarter, they made 145 million in net income. So they made 145 million in net income, and the dividend cost every quarter 9.8 million. I can't stress how much future room there is. Like, they could afford to 3x their dividend right now, but they just choose not to. And since their dividend payout ratio is so low, what are they doing with the rest of their money? This is the reason I buy them. for the share buybacks. They've bought back over 6% of all the shares in the past year. Here's what that does for you. If we look at the net income is up by 0.5, but the net income per share is up by 6.4 because you own 6% more of the company. So, and you get the future dividend growth here. So this is my way of getting exposure to oil. Great compounder, I think. I really welcome them to the never sell portfolio up here. Same with Ferrari. I'm going to make a video about these two soon. By the way, best way to support me is just subscribe to my YouTube channel. I'm trying to build up my YouTube channel there. It's called Nathan Roberts. Also in the link tree in my bio. I'm also streaming on there. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Coca-Cola and Pepsi for the holidays. Yeah, hey, actually, look at this. Actually, here's the difference. There's Coca-Cola at the bottom there. The high yielder, and I actually own Coca-Cola Consolidated. This is the bottle. Let me remove that. It gets a little annoying, but I actually own the bottling company, and I've been shilling for this stock for a long time. I've been pumping this one. I haven't talked about it much lately, but this is a great company. It's obviously a lower dividend yield than Coca-Cola, but it makes up for it with the insane stock price appreciation. Pepsi, speaking of Pepsi, they just had great earnings, right? Wow, look at that. Up another 3. Wait, hold on. Yeah, look at those 2 candlesticks. That's great news. Let me pull up the 5-day. So, yeah, Pepsi's having a good week. That one's a nice dividend play. If we go right here to the dividends, you get a 3.7% dividend yield. So not too shabby. Hopefully investors were scared about growth concerns. If we go to the revenue right here, oh, actually, this is new. This came out yesterday, so this is updated. Because I remember looking at this literally a day or two ago. And hey, what up, Lulu? This is the number we were looking at. I remember the 1% growth, but the revenue's up 2.6. Did that beat estimates? Slightly beat revenue, missed on net income, but met on EBITDA. So met on expectations. Maybe they rose guidance from that Celsius acquisition, but sales are up 2.6. Net income still fell by 11. So we just want to really, the reason Pepsi, if we zoom out, is the same price basically that it was in 2019 is because the growth is really slowed. This really doesn't even beat inflation if you think about it. 2.65, 111, but they still make great net income. Like it's basically $2 billion a quarter, and then they share it with you in dividends. So can you look at SoundHound? Let's do it, man. So SoundHound AI, this is some AI audio subscription company. And if you're a shareholder of this stock, there's one thing you really want to focus on. And that's the reason the stock is gapping up so much on earnings is because of their subscription revenue. This is a subscription model company, and I love that because it's, predictable. Basically in 2023, look at this. It was nothing. The subscription revenue was pretty much nothing, but the growth has exploded. It's up 700% after it grew 800%. So it's at a new record, and it beat our expectations like crazy. Analysts expected 32 mil. They reported 42 mil. Insane beat. So that's why they gapped up on earnings and have been doing great ever since. And they revised the future growth estimates to 50 mil. So they really just transitioned from a revenue-less company to an extremely growthy one. Still be careful. They lose around 40, 50 mil a quarter in net income. But as long as they keep up this growth, you're watching that subscription number if you're a shareholder. Hopefully that was helpful. Hey, what up, JG John? Should we look at IBKR? Let me know if you want me to look at that one. I bought Energy Transfer yesterday for the long run. Hey, Energy Transfer does pay a K1 tax form, but they're actually a great dividend play. RSKD, what is this one? RSKD. So this is Riskified. I haven't heard of this one before. If you look in the top right, they're only a $700 million company, so an extremely small market cap, do beware. But let's go look at their numbers nonetheless. What app is this? Hey, Will, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. Sorry, I might have to actually reset this app or the Apple TV. But let's see. Revenue for review services recognized under accounting code. Okay, whatever. Looks like the revenue is growing nicely. Let me just see what the analysts expect. So they've been beating on expectations. They're expected to go profitable next year. That's good news. Let's see. So the revenue is only up 2.6. I'd like to see more growth than that. Barely beats inflation, especially. Yeah, so the whole company's worth 700 mil, and they're losing like 10 mil a quarter. And yeah, look at that. Whenever you lose money, that money has to come from somewhere. But so the assets are slowly declining, but it still looks like they have a nice, 340 million of cash. So probably like 200 mil of net cash. So they can burn net income like this for a couple more years. But we really want to see the growth come back to the revenue. That might be why the stock is struggling. Just a small name. hard to trust. I don't know if they have a moat either. Um, Hey, let's look at RKLB, then we'll look at IBKR. Yeah, so Rocket Lab, so check this out. Let's read what this article is. Rocket Lab signed space deal with Japanese Space Agency for 2 Electron missions. Pretty cool, I guess. Yeah, there it is. For 2 launch contract JAXA for satellite missions. All right, so we're just seeing good sentiment for the future. They're actually doing work, making contracts. This is, I've been saying, my favorite space stock. I'd stay ASTS. I think this one's a more like better bet on the industry. That's not as speculative because this one has real revenue. Like, check this out. Space Systems revenues up 27 after it grew 8, or 94 after it grew 9. Like, the growth is insane. It's at a new record. And also their launch services are also at a record, up 46 million to a new record, 60%. So that's really good. The growth, they're beating on expectations. The orange lines with the analysts expect big beat on revenue this quarter. Still beware, they're losing a lot of net income, 50 mil a quarter. But as long as they keep up this growth, they also just completed an acquisition of Geost. They're acquiring another company now. They're signing new contracts. Would I buy it at an all-time high? Certainly no. Maybe nibble, but that's my favorite space play. Congrats if you own them because they've done great. So IBKR, Interactive Brokerage, this is one of the brokerage industry like prints money. The margins are high. The margins are really high here. So check this out right here. Interactive Brokerage, but see, their DARTs, daily active trades, are 3.5 million on average. Their total brokerage accounts are growing. It went from 2.9 to 3.9. Wow. That's major. They're actually, more importantly, it's paying clients. That's the, clients that actually pay. So paying clients went from 2.9 to 3.8. So that's great news. And if we go to their margins, this is the crazy part. Margins for brokerages are insane. Robinhood has insane margins now. Good dividend. Yeah, you look at that dividend growth. It just more than doubled since 2023. So I love the margins, literally 40% net margins. It's up 16%. So if you go to the revenue is up 7.2. So revenue is up 7, but net income is up by 25. They're making nearly $1 billion in net income a quarter. And I also believe Nancy Pelosi owns a little bit of Interactive Brokerages. So they're kind of like a competitor. They are to Robinhood. I know Robinhood is seen as like a more growthy version of them. Same with food too. Stocks are, Robinhood's down 5. Dang, SoFi was green by 4 this morning, wasn't it? Yeah, dang, it was $29. Now it's down. Well, that's just the whole market right now. Futu's down 7. That's another great brokerage here. Just look at Interactive Brokerages. I'll be super quick. By the way, this app I'm on, or this brokerage I'm on right now, this is this app publicly traded. And if we also go to their net margin, again, insane margins, these brokerages, 48% net margin. I mean, the revenue's up 69, net income's up 111, 50% net margin. These brokerages make their money from commissions and interest income. And that one's super growthy. Also, like if I go, I'm on this brokerage right now. Here's how they make it. If I go in the middle of my screen, I have $975 of cash. It earns me daily interest, or a 3.85% APY. They make a little APY on top of that. So that's kind of cool. Can you go through Chargy? Hey, what's up, guys? If you got any stocks you want to look at, let me know. Hey, watch out for that guy in chat there. Hold up here. Let me report him. There we go. Okay. Pocket, what up? Pocket Kratos said, how about Kratos? Let's do it. Hey, so I can see why you changed your name to this company, because it must have made you some money, because this one has had an incredible performance. This is a government defense play. They just renegotiated higher terms for their contracts. Check this out right here. If we go down, 80% of their revenue is from the government. Their Kratos Government Solutions revenue is at a new record, up 30% year over year. And that beat like crazy on the analyst expectations. Like, usually if you just look at the numbers, quick glance, it usually explains why the stock is either doing really good or the stock is doing really bad, like Lucid. And in this case, it explains, like Palantir's at an all-time high because of their numbers. Anyway, they also sell some drones. I think that's what that unmanned systems revenue is. People like this as a drone play, but anyway, they've just been beating on expectations like crazy. The valuation's nuts though. They are profitable, but if you do a net income multiple, if you do 20 million of net income a year, or you basically do 17 billion divided by 20 mil, They're an extraordinary expensive company. But okay, let's see here. ASML, let's do it. Hey, what up? Rafi said NUAI. NUAI. What's this one? Then we'll look at ASML after this. So, New Era Energy. So we don't really cover these kind of stocks. If you look in the top right, the market cap, this whole company is only worth 60 million. So really, there's so much speculation around these names. Like if you go to the revenue down here, revenue is 200K. The balance sheet's not great either. There's so much like risk with this name, so you never want to keep this as like a meaningful size position in your portfolio. But it looks like it's a natural gas LNG play. Interesting. And the revenue all comes from the US. There you go. Hopefully that was helpful. So let's look at ASML right here. This is an EU play. I actually just bought an EU company. I bought some Ferrari stock. Hey, David S. Yo, thanks for the rose there. I appreciate that. Hey, remind me to look at CHA, Jay, and Novo Nordisk too. I want to get to these. So here's ASML. This is the lithography company making these basically chip making devices for three main people. They make it for Intel, Nvidia, and Samsung. Those are basically their three customers. Let's see, is there any news for this company? ASML projects Q3 orders at 5.4 bill of euro. All right, well, let me just go show you their numbers right here. So they honestly deserve to be at an all-time high going off their financials. Like if you go to the revenue's up 35. So revenue's up 35, but if we go to the net income is up by there we go, 86%. So that means they're expanding margins. Margins went from 25 to 35. That helps out your bottom line tremendously for your margin to grow by 10%, especially when you're doing, $9 billion of revenue a quarter. That 10% extra margin is an extra billion of after-tax net income for the company. So that's really impressive. Look at that beat on net income this quarter. They expected $6.10. They supported $6.90, and you get a dividend that changes every quarter. I really like that. What app is this? Hey, what up? Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. By the way, this is a brokerage. It's where you buy stocks on. And it is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. Someone said, or Northern, what up, dude? He said, Amazon, let's do it. Amazon is one of my favorite stocks to buy. I'm actually going to be looking to buy one more share of Amazon because it's starting to get to that level where, like, if you're like me and have the intention to never sell, it's worth it to buy right now. So check this out right here. I was reading an article. Yeah, their Amazon Prime Day was a big success, but their numbers are phenomenal. 15 to 20 billion in net income a quarter. Margins are expanding. This used to be a tough buy. Negative margin business. Low single digit margin in 2023, but now they have double digit net margins. That's because Amazon is really a cloud play. If we go to their AWS, just their Amazon Web Services revenue, it's over 100 billion of annual revenue. This is their highest margin business, brings the most of their bottom line. Amazon's an advertising company, subscription company, e-commerce play, book play, robotics play. They're a UPS, Instacart, Oracle Cloud, Walmart, all in one. Yeah, they're a grocery store. Amazon's an ETF. They own Twitch, like Whole Foods. Like you just gotta own Amazon for the long run. Oh wait, hey, there was a stock I wanted. CHA, that was the one. CHA. Okay, so $3 billion company. The stock is at all-time lows. They haven't been public for that long, but pretty much all-time low today. Let's go see. So number of stores. So what is this? Let me go check. This is a high-end tea beverage brand. They're a restaurant. Wait, China. Wait, hold on. Okay, so do beware, all of their revenue does come from China, so that makes more sense. So, but we can't see their number of stores grew a lot. It went from 4.88 to 6.8. They're partnered stores. That's the best thing. Actually, I bet they have, what's their gross margin? Yeah, 50% gross margin because they're probably in the franchise model. Let me check their total sales. So yeah, sales are up 12% after it grew 300. Yeah, wow. So looks like something happened to their profits this quarter, but it looks like they're on average. This is in USD, by the way. We've converted it from Chinese to USD. So anyway, it looks like a Chinese restaurant. Another one that I really like is kind of like that one is Luckin Coffee. This is who's given Starbucks a run for their money in China. We can see their number stores are kind of the same thing. All their revenue comes from China, but a coffee brand. Anyway, um, Orico said Apple stock. You know what? Let's do Apple stock. Hey, we looked at Pepsi a bit ago. Remind me to look at Pepsi a little later because I know they reported earnings yesterday. They're doing fantastic. But here's another stock that I think you should just never sell. Like, there's a reason this is Buffett's largest holding. There's a reason this is Nancy Pelosi's largest holding. If you remind me, I'll try and show that after this. But like a lot of people are locked in the Apple ecosystem. Like I'm on an Apple iPhone right now, but let's go to their numbers right here. The numbers is the best part. We obviously can see their smartphone market share. Apple has a 17% smartphone market share. Literally half their sales are just to iPhone. But the most valuable part of Apple is the services business. Because whenever you go spend $100 in the App Store, $30 of it goes back to Apple as legit a super high margin royalty. Then they have the Mac sales, the wearables like the AirPods and the watch, and then the iPad revenue. And here's also why Apple's affected by tariffs. The Chinese tariffs, they're prone to that because only 36% of their sales come from the U.S. Imagine China said, or look at China right here. China is 17% of the sales. Imagine China says, no more Apple iPhones. I would never expect that. That wouldn't happen ever, I don't think. But anyway, 36% of US. I always thought it was a little more. 26% is EU, then all these other countries. So yeah, best part is they just print money, 20 billion plus in net income a quarter, and you get the nice growing dividend. So Apple is a great never sell. And you know what? Let me show you the super investor portfolio. If we go up here to the Nancy Pelosi portfolio, her largest holding, 25% of all her holdings are in Apple. If we go to Warren Buffett, 23% of his entire portfolio is just in Apple. He has some of the higher yielding names like Coca-Cola, Chevron, but yeah. Okay. En route said Adobe. Oh, FWONA. I'm pretty sure Warren Buffett just bought a little bit. Warren Buffett does own some Liberty Formula One. That's like the race people. Formula One, they probably get a lot of sponsorship revenue. So what's their gross margins? Oh, that's not as much as I thought, but looks like they made some good money this quarter. It's a little choppy. Like if you zoom out to their net income, if we zoom out, actually it's more consistent. This year it's been a little choppy, but they made good money this quarter. No dividend on them. I just bought ticker symbol Race Ferrari, kind of similar. Just subscribed yesterday. Appreciate that. Ian Route. He said thoughts on Adobe. Hey, thanks for the subscribe. Yo, by the way, best way to support me is just subscribe to my YouTube channel. I'm trying to build it up. My YouTube channel is called Nathan Roberts. Also in the link tree in my bio. I'm streaming on there, so if you miss anything, you can replay it. I'm streaming on YouTube and TikTok. What app is? Oh yeah, and if you want to get this app, I'm on. If it's in the link tree in my bio, the first link there. What up, jokes? So here we go. Here's Adobe. This is one of the software names that are really getting hurt by the AI thesis. They're saying in 10 years from now, will we need Adobe? Will we need their video editing software as much? So the future demand might go down. So future revenue might go down. So that's why the multiple has collapsed. They're trading at 21 times net income. I think they've overdone it. I think they've too much prices as an AI loser. I think we're always going to need that little final touch on art, but it still will probably hurt their demand in some way or another. I know Figma is they have competition, of course, but Canva, I think, is like a Photoshop copy. But anyway, I'm on Photoshop and After Effects nearly every day, so I use their product all the time, and I love them. But so that's why I think it's worth nibbling. I wouldn't have it as a huge position, but I would nibble on the stock right now. I mean, it looks pretty good, right? Because the right now numbers are good. I mean, I don't love that the net income's only up 5. Last quarter is up 7. The revenue it's just barely over 10. That's good. So the revenue growth is double digits, which is good. Honestly, Adobe should do some sort of M&A, like buy a company. But this is the good news. They're making $1.8 billion in net income a quarter. What are they doing with it all? Well, they're actually just deploying it on share buybacks. Since they're not doing any M&A, they're buying back their own shares cheap. And here's what that does for you as a shareholder. If you look at the net income, again, the net income's only up 5, but the net income per share is up by 11 because they've bought back 6% of all the shares that exist. Because the share part of the ratio went down by 6%. So that means I like Adobe more than dislike, especially at this price. Risk to reward looks decent on them. Amphenol Group, yeah, hey, a stock. if anyone's heard of GLW Corning, these are two very similar companies in this like fiber optic harsh environment like solution industry that's supposed to CAGR at like 28% through 2030. So that's why these two stocks have been surging. But anyway, yeah, I want to buy more of this stock. The revenue's up 56%. I expect it to grow like another good like 50%. It's insane the growth that's actually expected. And not just revenue, but they have pricing power. Revenue's up 56, but net income's up 108. They have a 19% net margin, highest margin ever. GLW and APH are two plays for this industry. Hey, try not to spam there. Hold on here. Yeah, we'll try and get to take two. But yeah, try not to spam there. All right, let's see. Mr. Thumbs Up said PSRB, and then we'll look at Zora. Wait, PSRB? Wait, I typed in PSRB. Mr. Thumbs Up, I can't find that one. Sorry about that. So let's look at Zora right here. What up, man? I've never heard of this one either. ZORA. Well, you know what? My bad there. I typed that one in and I can't find it. So it's just not on my exchange. It must be some sort of foreign stock. Sorry there. You have to talk about the best stocks to buy now. Hey, what up, Raph? So not financial advice. Here are two stocks that I bought today. Or actually this one I bought yesterday, but ticker symbol RACE, Ferrari. I love this company. The more research I do, the more I love it. Totally biased though. And I also bought Murphy, but I'm just telling you what I'm actually doing in my position. And I plan to like not just trade these. I actually plan to like hold these for many, many years. So again, none of this is financial advice. By the way, I don't sell anything. I have no course, book, WhatsApp. Watch out for people impersonating me. I'll never follow you, DM you. Hey, what up, Dylan? Thanks so much, dude, for the roses. He said ONMD. Let's do it. So this is OneMedNet. So we got to be very careful with this company because if you look in the top right, they're only worth 146 million. So obviously a micro cap, but they're up 20% on the day. So there must have been some sort of good news. Do they have revenue? Revenue. So the revenue in the most recent quarter was 100,000 and it fell 30% year over year. So that doesn't, oh, wow. So that's rough. So they didn't actually make net income. The liabilities just plummet. That's good that the liabilities plummeted, but they still have more liabilities than assets. But they must have paid that. Yeah, they issued 3 million of shares, but that fell by. Okay, I'll have to do more research on that. But I just finding trouble trusting this one. 100,000 in sales, down 30%, losing 2 mil a quarter. I'd be very careful, but congrats if you own this one. It's up 20%, but just really hard to trust these kind of names with just basically no revenue. Hey, what up? JS said DT Dynatrace. What is this one? I don't know if I've looked at this one before. Let's check it out. So they're the same price as they were back in 2021. So they've been flat for a while. Let's go see why. 60% of their sales. What industry are they in? Software. So this is a software company. You could Adobe. A lot of software names are struggling, so I get it. But the growth is good. Revenue's up 19 after grew 19 after grew 25. So they're still on a growthy streak. Revenue is almost 500 mil a quarter, and they're net income positive on that. They had a little one-time adjustment this quarter. It wasn't actually 360, but it was still positive. Wow. So they're actually expanding margins. That's great. 10% net margins right now. I mean, I like them. Oh, we could see if Morningstar says there's a moat here. Economic moat is narrow. It says they're both Dynatrace is a competitor to Datadog. Okay, anyway, we can read what the bears say. They're Dynatrace is focused almost exclusively on customers with more than 1 billion in annual revenue, which puts it at a disadvantage in terms of penetration with Datadog. Anyway, they seem interesting. I like that. Their numbers look good. The numbers do look good. Hey, Dante, no way, brother. Thanks for the dolphins there. Hope you're having a great day. Let's check out BSX. I think that's one of those huge momentum plays, or actually not momentum, like fundamentally good one as well. Yeah, they're on my watch list. So this company deserves to be at all-time highs, or they're having a little health. I just call this a healthy RSI retrace after it's had a great year. What are the names of these? Yeah, hey, by the way, Opera, these are brokerages. If you want to get this brokerage I'm on, it's in the link tree in my bio, or all the brokerages or all these apps I'm using are in the link tree in my bio. It's where you buy stocks on. Let's see. McDonald's is my only green stock in here. Yikes. Yeah, we're down basically 1% in that portfolio. Dude, this is the Oh, look at the top middle. Hit the like on the stream for me. I love being fully transparent. I love sharing. I stream. Here's my lifetime performance. We're up 20% all time, which is underperformed. And we're down 3% on the day. AMD's down 5, Robinhood 4. Is anything green? Only stock green is my egg company, Comain. That's funny. Okay, back to Boston Scientific though. Let's go look at their numbers. This one looks good. So they're in the cardiovascular industry, and check out, like, this is why I can trust this company. This is consistently good. Revenue's up 25, after grew 21, after grew 15. Like, the growth rate is growing. Just like a page of green here. It looks amazing. And not just that business, but also their med surge business. It's up 15 after grew 11, after grew 10. Like, they're on a streak right now. They're beating on expectations. You know, the orange lines, what the analysts expect, beating on revenue, beat on net income, beat on EBITDA every quarter. Like look at this net income. This is what's crazy. Nearly 800 mil of after-tax net income, and you get the nice dividend. Or no dividend, but they will eventually. So yeah. All right, let's do TTWO. So someone wants me to really do take two. Let's do it. So this is the company that owns Rockstar Games. So if you've heard of, GTA 5, Red Dead Redemption, this is the stock that owns it. And the reason they're at all-time highs right now is because they're expecting a huge influx of revenue from GTA 6 that's about to be released. As soon as they release GTA 6, it's instantly going to bring them in like billions of revenue. And that's really what's being priced in. At this point, I don't think there's any analysts that aren't aware of that. So that being said, the risk reward doesn't look great here. I think it's mostly priced in all the hype, because right now the numbers are terrible. You don't really look at their right now numbers. You look at the next 2 year out estimates. I can't wait to see what happens whenever they release that game to their numbers. If they beat on expectations, could go up even more. Hey, we cannot cover DK&G just because of the industry, sadly. SMR versus Oklo, they're both pretty much pure momentum nuclear names. Neither of them are. SMR, if I had to pick one, is like better, just because they have some revenue. Like if we go down here and look, like they actually just got their first contract. Let me pull up the revenue right here. Yeah, look at this. So before today, exactly a year ago, revenue was 900,000, 400,000, but then it went to 30 mil, and it's been a couple mil ever since. So they got their first ever contract, which is good. But definitely this one's better than Oklo, because Oklo has no revenue and probably won't have revenue for another year. All right, hey, what up? Mr. Thumbs Up said SPRB. Let's do it. Spruce Biosciences. Oh, hey, look at that. They had a rocket. They went from $8 to $100. Oh, they've done some reverse splits. Yeah, they're a $90 million company. So again, still beware. Whole company for $90 million. Oh, so their revenue list. They have no revenue. That's from 2024. It went from 600,000 then to zero. If we go to net income right here, oh yikes. So whenever you lose net income, that money has to come from somewhere. So as you can see, assets just on the steady decline. But if I had to guess for the reason of this huge rally, would be that they had some sort of FDA approval. It's like they maybe issued 50 million of shares or got $50 million of funding. That'd save the company. But there was some sort of good news there, I'm guessing. So DG stock, let's do DG, Dollar General. So this is kind of a recession play, like a staple play. Like whenever tech does bad, like usually whenever the industry is doing bad, like the dollar stores, the defense stocks do good in recessions, war fears. Kind of like McDonald's, it does good. But the dollar stores have been struggling just from like new competition, like. People are saying Amazon's the new dollar store and all that, but let's go to their numbers here. So yeah, they're still making good net income, but the growth is kind of slowed. Revenue's up 5%. Actually, that's not too bad. Mid-single digit revenue growth. So mid-single digit revenue growth. They're making a couple $100 million net income a quarter. It looks like they're making more consistent net income now, which is good. Are they doing share buybacks too? So here's how you can tell the net income's up 9.95. If the EPS is up more than 9. Oh, they haven't bought back any shares. Actually, you've been diluted by 0.4, but that's okay. What's the multiple? Yeah, they're trading at 18 times PE. Dollar General is good. You get the nice yield too, a 2.36% dividend yield as well. Hey Dylan, we looked at ONMD right after you gave that rose. I'm not sure if you missed it. And we just looked at it, so I don't want to look at it again, Dylan. But hey, if you missed anything, I'm also streaming on YouTube, and you can rewind it. I'm streaming on YouTube. My YouTube channel is called Nathan Roberts. It's also in the link tree in my bio. Drone Shield, bro. Hey, what is the ticker symbol for Drone Shield? Maybe we can find it. Someone said, "What up?" User49 said, "Honest Company." So the Honest Company, this one, I can see why they've really unpriced this whole rally because the growth is slow. Like, I understand why they gap down on earnings right here because investors are worried about future growth. Like, they're just not growing as fast as investors want. Because like, I'll just show you the numbers for yourself. You can draw your own conclusion. Like, this just isn't great. The revenue is only up 0.4% year over year. So total sales, revenue, the lifeblood of the company, is only up 0.4. Add inflation to that loses to inflation. But good news, they're making some now actual profits. Used to be a little choppy, but the past 2 quarters they made a good 3 mil. But again, I just want to see more growth. They just sell a commodity, diapers and wipes. I wouldn't trust a lot of money in that one to really outperform the S&P 500 in the long run. So yeah, I try not to spam there. Hold on. All right. Hey, what up? Elato said grab. Hey, I love this stock right here. If you're looking for an international company, hey, what up, Gym Therapy? Hope y'all are having a great day. Yeah, happy Friday. So actually, the market's not having a happy Friday. Check this out. Let me see real quick. Dang, Qs are still kind of at the. Hopefully, we've bottomed out for the day. All right. But yeah, anyway, here's Grab Holdings. This is one of my favorite international stocks. This is basically international Uber. They do exactly what Uber does, but in all these other countries. Like, notice the US and Canada aren't on here. That's what I like about them. It's Malaysia, Indonesia, Singapore, all these other countries. And the most genius part about that, or about Uber, is the fact that they took a stake into the company. They're the largest shareholder. So Grab is backed by Uber and Toyota Motor. Toyota Motor owns 5.5% of all the shares. They have no net debt. Revenue is growing nicely. Revenue is 820 mil. In 2 quarters, they're expecting 930. Like, they're expecting more growth. They're net income positive every quarter for the past year. Free cash flow positive every quarter. So just one that I like. And I love the fact that Uber is a shareholder. Thoughts on Rivian? Or wait, CNR? Oh wait, are you talking about Canadian Natural Resources or Canadian National Railway or Canon? Wow, there's a lot of CNRs. But Rivian, I don't love. Here's another stock that's kind of backed by some good people. If we go to Rivian right here, we go to shareholders. The largest shareholder of Rivian is actually Amazon. If anyone's ever seen those electric Amazon vehicle delivery trucks, those are actually Rivian, made by Rivian. So one thing I wouldn't even be talking about Rivian if it weren't for the fact that Amazon has those orders with them and has a stake in the company, because this is a super capital intensive business. I just don't love companies that burn through money like this. Like, they lost $1 billion this quarter. 500 mil, 700 mil, another $1 billion. So losing $3 to $4 billion a year isn't great. But I wouldn't own them for the long. It's tough. It's really tough. Is Microsoft a solid dividend stock? Absolutely, absolutely. Wait, let me look at this one real quick. Can you do Webull? Oh, hey, let me look at this one. NAK. Northern Dynasty Minerals, a $1 billion company. Oh, wow, look. Whoa, what is this right here? All right, tell me what this is, Moomoo. A double bottom. All right, well, anyway, there's a lot of the mineral stocks, like, it's a Canadian company, so we'll convert the currency from Canadian to USD. So they're a revenue-less company. So if we go to the revenue, they've never sold anything, not a product or a service. Yikes. Look at, whoa. They've really leveraged up. That's not good. Yeah, the assets slowly go down and the liabilities are going up, but the government or something, well, this is a Canadian one, so I don't think the U.S. government, there's some sort of news momentuming this higher, and I don't know what it is, but I will just say be careful because, revenue-less company, losing a lot of money, bad balance sheet. So I don't know. But a lot of them, like LAC, MP Materials, like a lot of these are momentuming up because we want to be more resource independent. Um, PFLT. What's PFLT? Let's do it. And then Target. Hey, what up, Liam? What up, dude? So this is Pennant Park. Let's check it out. I'm guessing a high income producing asset. It hasn't done too well. It's almost, it's down bad from its. Whoa. Well, let me actually zoom out here. Wow, that's like the all time low ever. This is lower than it was in 2011. So let's see the yield though. So yeah, see these high yielding assets they just, even when you include the dividend, don't keep up with the S&P 500's total 8% CAGR. So you're buying this to maximize your income, in my opinion. You shouldn't expect to outperform. And yeah, it shouldn't outperform, but you're buying it for the income. Okay. But if you're 10 years away from retirement or something, I wouldn't really touch that. Kind of like that might be a covered call ETF or something. Look at SoFi and Nebius. Hey, dude, I love SoFi. I do own them. And they're down 3% on the day. I wonder if there's any news. BOFA, which is Bank of America, rose price. SoFi launches commission-free options trading. Well, you'd think they'd do that sooner. Well, all right, let's check this out right here. So that actually might not be good for the future profits, but I do have SoFi shares. They've been one of my best performers. I've owned them for many, many years. We got 24 shares of SoFi. So yeah, check this out. They're not just propped up at all time or close to all-time highs for momentum. They're at all-time highs because their fundamentals are so good. Check this out. If you go to their financial services right here, they're a fintech. They have their own banking charter. This growth is tremendous. I mean, revenue's up 105 after it grew 80, after it grew 222. Like no analyst expected this sort of growth. And we can actually see the analyst expectations right here. That's what the orange line is. These are from S&P Global. And huge beat. Analysts expected 804. They reported 850. Like that explains why they're gapping up on earnings reports day. Every quarter they beat on revenue. Every quarter they beat on net income. Every quarter they beat on EBITDA. That is the recipe for why the stock's at all-time highs. So again, I am a shareholder. I'm totally biased, but I really just think people are starting to take SoFi serious. They're extremely growthy. 850 mil of revenue. Out of the 850 mil of revenue, 100 million of it was after tax net income. So I own them, but I regret actually, SoFi is one of my biggest regrets. I regret every share I've ever sold of them. I sold most of my shares that were way lower. I only have 24 shares left, but yeah. Okay. What would you buy today? Good question. Here's what I'd buy today, and here's what I did buy today. I bought $700, or basically 2 shares of Murphy today. MUSA. It's my new oil and gas play. I love that one. What program? Oh, hey, yeah. Hey, by the way, this is a brokerage where you buy stocks on. It's my favorite one. If you want to get it, it's in the link tree in my bio. Actually, all the brokerages are in the link tree in my bio, but this one's just my favorite, lowest fee, most useful one. I keep my idle cash in here as well because it earns the nice daily interest. So yeah, by the way, it's an affiliate link, full disclosure. All the links up there are affiliate links. So if you go sign up for Robinhood, Webull, or Moomoo and go and deposit $100, we'll both get some free stocks. I bought SoFi today. Hey, nice, Todd. Good to see you, friend. So yeah, Adobe. Hey, we just looked at Adobe Brick. If you give me a couple minutes, we'll do them again. So Rick said trade desk, please. Thanks for the input. Yeah, let's do it. CNR's Canadian National. Oh, the railway. Okay, hey, let's do CNR too. Any Nvidia or SPY? I actually do not own any Nvidia. I do own AMD though. That's my semi bet. Okay, is it good to buy stocks on Cash App? I heard that I've never done it myself, but they have fees. This one's commission free. Anyway, here's the trade desk right here. This is that TV advertising company, and they've lost some big clients, and they've seen increased competition. Amazon and Roku did a huge partnership. So Netflix, it's kind of been a battle between them. Netflix used to use the trade desk to find their advertisers, but now Netflix just switched over to Amazon and Roku. And on top of that, they just have an expensive multiple. This isn't propped up on some one-time adjustment. This is real. They really trade at 62 times net income, which it's tough to pay because their margins just fell 10%, like their net margin fell by 11% year over year. I still like them. This is why they're still going on my watch list, because I like this industry, I like this company, but I just think they're probably going to go lower before. I can't confirm the bottom is in on this company because like that multiple is still expensive. The net income growth is slowing. They're still making good net income. That's why I love them. They make great money, but the net income multiple is too expensive, and they just lowered guidance, I think. So that's why they gap down so much on earnings. If you miss on growth numbers and you're a high PE growth company, your stock collapses. It's that just same thing happened with Chipotle. High multiple stock, high PE company, miss on growth expectations in the stock collapse. What is this on Chipotle? All right, what is this? Bullish continuation wedge. The rise probability is at 95. Well, that's technical analysis. I like looking at the fundamentals. Like this explains it. If we go to the revenue right here, analysts expected 3.1. They only reported 3. And if we go to their multiple, it's still pretty expensive on Chipotle. That's another one I think the bottom isn't in. But even after the dip, Chipotle still traded at 35 times net income versus the industry average of 27. Oh, God. Let me get my tea right here. Buy Ferrari? Yo, I did buy some Ferrari. Yes, sir. I'm down on them. Everyone panics. Hey, what up, Prime? Hey, what up, Jacob? Let me get to these. We're SRR. What is SRRK? So this is Scholar Rock. I've actually never heard of this stock before. Let's check them out. So they're a $3.9 billion company. Do they have it looks like they have no sales right now. This is from 2022. So right now, 2025 Q2, they have no revenue, but it looks like they're expecting in 2 quarters, $3 million of revenue. So maybe this day right here, they gapped up because they're finally expecting future revenue growth or some actual revenue. Oh, wow. They lost $100 million this quarter, $80 million, $60 million. At least they diluted so they could somewhat afford that, but that's a massive loss rate. 80 to 100 mil a quarter, and right now there's no revenue. You're paying for a lot of future hopium here. I'd be very careful, but because they still haven't delivered on giving any revenue. But yeah, the future might be bright there. Yeah, Target. Hey, what up? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is a brokerage, actually. But yeah, hey, what up, YBD? Someone said Target's... Yeah, the thing with Target is, first off, they're kind of being out-innovated. Like, they have no online presence, like Walmart, Amazon, and like anything you can get at Target, you can get on Amazon probably. But here's the thing, they lost the growth, the lifeblood, the sales is down by 1 or 0.95%. It's a low margin industry, 3 to 4% net margins. So revenue fell by 1, but net income fell by 21. So their net margin fell by 20% year over year. That's because they sell more discretionary items. They're not like your typical grocery store. Target is being smacked more than, Walmart and Costco because they sell more discretionary stuff like beauty products, household essentials, home furnishing, decorations, all that kind of stuff. So one thing that's good about Target, though, only thing I like is the yield. The yield does seem to be safe. Actually, I would say that it most likely is safe. 5.2% yield. So here's the hope here. All right, you're buying the stock, you get 5% of your money back a year in dividends, but then you maybe hope for 1 to 2% stock price appreciation. Again, anyone who's kind of been hoping for that theory, for that, it hasn't worked out the past couple of years. It's only gone down. So you get your 5% dividends, but then you're down 5% in stock price. So you're net nothing. But maybe I'd be careful with that one. Wouldn't put a lot of money in that one. Wouldn't trust them in the long run. Kind of being out innovated by Amazon. I'd rather buy Amazon real talk. You're buying that for the income probably. So probably buy that for the dividend. Amazon's down 3.5. I'm actually looking to buy more Amazon because this is a great never sell. Okay. You have a position in Ferrari? Yeah, ZA. I just started it today or yesterday right here. And I just bought for the first time ever today MUSA stock, Murphy USA, convenience store oil and gas play. I'm buying them for their numbers. If you go look at their share buybacks, like everything, it's my kind of stock. Those are some good numbers. The numbers don't look great now in terms of the sales because the whole oil and gas industry is. If you look at Chevron, Exxon, the revenue is also down 10% year over year, but It's also why the stock is at an attractive price. So I bought it, get a good dividend, very low payout ratio, insane share buybacks. They've bought back like literally like 30% of the company just since 2019. So, hey, congrats on AMD this week. Hey, yeah, someone said thoughts on AMD. Let's do AMD, sure. They're actually down 5.6%. Thought I heard that was weird. Okay. They're down 5.8% on the day, but they've just had a great month. I don't think if you owned it before the gap, no one's too disappointed, like me. So I do own AMD shares, full disclosure, but let me give you some analysis on them. They had this huge OpenAI partnership. There's kind of like a circular bubble theory going around, but we could be in a rally. We could rally till the end of the decade through 2030, but because there's no catalyst really stopping this market besides just a little tariff fear. But basically, OpenAI owns 10% of AMD, and AMD gives them that for pumping up a bunch of AMD orders. So OpenAI is going to buy a boatload of AMD chips, but also have a 10% stake in AMD. So as AMD stock goes up, OpenAI stock goes up. And if you don't know, NVIDIA just took a $100 billion stake into OpenAI, and OpenAI owns AMD. So literally, NVIDIA stock goes up now whenever NVIDIA benefits from AMD going up. Like, the circle is crazy. So anyway, AMD, we'll look at some of their numbers. Again, the future looks very bright. The sentiment's good. AMD's like, hey, the world's biggest AI company is using AMD chips. But yeah, 17% PC GPU market share, big data center play. And check out this is probably going to get revised up soon, but every quarter, notice they beat on their revenue. They're beating on revenue or analyst expectations. And especially with the OpenAI orders, it's probably going to go up even more. And I like AMD more than NVIDIA for the law of large numbers. So here's what I mean by that. If we go pull up NVIDIA, let me pull this up right here. NVIDIA, let me go to mega caps here. So in the top right, if you look, NVIDIA is worth $4.58 trillion. So if you buy NVIDIA right now, for you to double your money, they have to be worth $9 trillion. So, that's going to take a lot of money like that. It's hard to do. Law of large numbers is starting to get to them. But with AMD, they're only worth $355 billion. Their technology is a year behind NVIDIA, but so be it. I think there's more room for growth. So anyway, that's why I picked AMD. Both have done amazing. Both will probably do great together. Actually, NVIDIA, to an extent, indirectly owns some AMD shares because NVIDIA owns OpenAI, which owns 10% of AMD. Or NVIDIA owns $100 billion of OpenAI. All right, anyway. I remember last week I said AMD. Next, hey, what up, Big Ren? Yo, that's awesome, man. So TIGR, is that Tiger Fintech? Or yeah, this is that Fintech that I really like. If you're looking for a stock that I think that is at a good risk to reward, I think it's this one, not financial advice. This is what I like to do. I like to show you the numbers for yourself. You can draw your own conclusion. Remember, none of this is financial advice. I'm not an expert. I'm just a college student. I sell nothing. I have no course book. Hey, Nate, please remind me to look at Meta. I definitely want to get to Meta, Nate. Yes, sir. But here's Tiger Fintech. I love this one for their fundamentals. Check this out right here. Their most important number is their paying clients. Their paying clients went from 0.98 to 1.19 million. So their paying clients are up 20% year over year, basically, which is the important metric. But look what that did to their top line and bottom line. You won't believe this. Revenue's up 58%. After it grew 32, after it grew 25, but the revenue was 138 million. Out of this 138 million of revenue, legit 41 million of it was after-tax net income for them. I can't believe that. Hey, Jack, hold on. I'm going to have to mute you there. Sorry, buddy. Don't spam your stock 20 times in a row. My goodness. So anyway, if we go to their net margin right here, 30% net margin, highest margin ever. Very consistent, growing their net margin, making this isn't like some adjustment. Like, this is real net income they're making. So I love them for the growth and the margin expansion story. So where's the revenue come from? This actually changes things. It's an international fintech. New Zealand is 37% of the revenue. US is 31%. Then China or Singapore is 23%. So the Cayman Islands too. That might be why they traded a low multiple, but I care about the numbers. And this is in USD, and these are good numbers. Revenue's up 58, 41 million net income. They might pay. I wonder what their tax rate is. You know what? We can probably go check that. Is now a good time to buy? Honestly, I wouldn't go full size position here, and I again would never make this a big size position. But I have so many fun money positions. I'll show you what I mean by that. If I head over here to my portfolio, like T Row. Oh, these are great examples. Supermicro, P6, and Clear Secure. I have $400 to $500 in these. I never want them more than 4 to 5, unless they grow to that size, then I'll let them grow. But I don't want them really meaningful size positions for me. That's what I'd also have Tiger as. Let me actually go see. Here's a cool thing you can do. You can go over here to the key indicators tax rate. Okay, 20. Look at how'd they pull that off? Shout out to the CFO or something. Their tax rate went from 31 to 19 while expanding margins. Okay, anyway, let me get off Tiger. They're kind of like, they're a bull. They remind me of SEZL. They remind me of Dave. Is Bull a good? All right, we've been seeing some Webull stock talk. So let's talk about them. If you're wondering what is BULL, what is Webull, that is actually this app right here, publicly traded. So I use their brokerage, I use their software, so I've probably given them a lot of transaction fees. And here, full disclosure, let's look at this at the top here. We're down 3.9% in this account today. So hey, drop a like on the stream for me. But all-time our open profit and loss, I feel like no one else shares this. Like, I love being fully transparent, but look, our total open profit and loss is up in 19. But here's their stock right here. One thing I like about them is how growthy they are. Hopefully they'll turn into like a Robinhood stock one day. But check out the revenue growth. The revenue's up 46% year over year after it fell 12. But looks like the growth is back. They also just introduced crypto back to the app, so that should be a nice earnings tailwind. They also lost net 30 million net income, so I would be careful here. But I would probably I would have this as like a small position. Not a meaningful size one, but a small position right here, because I have a hunch that like they literally, I kid you not, like I haven't bought any crypto. I feel like most people who want crypto already have it, but literally we will just introduce crypto back to the app, and crypto is where you make the high margin transaction fee. Whenever you go buy a stock on Webull or Robinhood, they barely make any money, but whenever you go buy crypto and buy and sell it, they make so much more off that transaction than a normal stock one. And that's actually why Robinhood followed Bitcoin for the longest time, because 50% of all of Robinhood's net income came from their crypto transaction fees, because crypto transaction fees were so profitable. So Robinhood just followed whatever Bitcoin does. But now Robinhood's in the prediction market and all these other stuff. So Robinhood is a beast. Moomoo is too, or Futu stock. They're all, I love the brokerage stocks. And I do on Robinhood, by the way. It's actually my best performing stock of all time. We are up 10x on them. And Futu or Moomoo, we're up 46%. They're down bad today. Futu's down 10% today. Ooh, I might look to buy more. Hold up, actually. What's the price on this again? $150. That I might look into that. Again, they're falling on the China tariff escalation. Remember, the whole market's all red today because of the China tariff stuff. So Supermicro, all right. The thing with Supermicro is I would not touch this company at this price. I think it honestly has, and by the way, I'm a shareholder. So I want them to do good as a shareholder, but I don't see a reason to buy them now. I'm up 105%, so especially I wouldn't buy them for me in my position. But for anyone in any position, not financial advisor, I just wouldn't buy Supermicro here. I'd just be patiently watching them on the sidelines, because I honestly think they're going back to this $40 level. They're having issues with their margins. Now, Supermicro, actually, it's a mixed bag, because on the one hand, we're seeing major orders from Oracle, OpenAI, like opening up 30 new data centers, and they're going to need the chip installers like Supermicro to install the chips for them. And like Dell too, but the margins are falling a bit. Here's the good news. Here's what I love. So it's like a really mixed sentiment bag. It might be fairly valued here. I just don't know. But check this out. Revenue's up 7.5, but the net income is down by 35. What does that mean in English? Yeah, net margins collapsed. Net margins used to be 8, 10%. Now it's 3.3, 2.3 last quarter. That's rough. It's a commodity. Dell does it now. But I am a shareholder. Supermicro expands partnership with AMD and OpenAI. Yeah, pretty cool. What happens is, hey, what up, Prime? By the way, if you want to get this software I'm on, it's in the link tree in my bio, the first link there. This is a brokerage where you buy stocks on, and it's an affiliate link too, full disclosure. So if you want to get this brokerage I'm on and you deposit $100, we'll both get some free stocks. It's my favorite brokerage, lowest fee. Because I also have Webull and Robinhood, but I do all the analysis on this app because they're the best. They're the best. Okay, so Snowflake. Yeah, thanks for that, Meech. Yeah, DCA is dollar cost average. What that means is you slowly buy into the stock over time. Instead of just spending all your money at once buying it, you slowly buy into it over the coming weeks, and it's a more disciplined, patient approach. So check this out. This is Snowflake right here. Basically, Palantir competitor. Companies have a bunch of data, and Snowflake and Palantir basically make their data more valuable. They can do stuff with it. And we'll check this out right here. If we go to this is a growth company. Like, check this out right here. The revenue's up 32, after it grew 30, after it grew 37, after it grew 85. Like, they're on a streak. Like, that's what you want to see for a growth company. Just every year, the annual quarterly revenue just hits a new record. But the one thing, the reason why Snowflake is, kind of flat since its IPO in 2020, basically been flat for 5 years, is because they're struggling with net income positivity. Look at that, burning through 300 mil, 400 mil a quarter. I don't love the fact that they're burning through all that net income, but analysts know this, and the reason why they rallied up is because they actually lost less money than analysts expected, or EPS, same thing. EPS is just net income per share. Analysts expected 97-cent loss. They only lost 89, and they beat on revenue expectations. So anyway, Snowflake's a cool one. How are you able to show your phone like this? Yo, I'm actually Apple TV screen playing to my computer, and I'm streaming on my computer. So what's up? Hey. What up, Gary? What's your overall thoughts on the rare earth stocks and uranium? Yeah, a lot of them are overpriced. Yeah. What up, that man? Yeah, uranium's interesting because there's a lot of executive orders, stimulating that in nuclear reactors, which need uranium. Gary said this stock. Okay, so we're not really going to cover this one. If you look in the top right, they're only worth $16 million, and the stock is at an all-time low. When we're talking about a stock worth $16 million, it's really just not worth our time even talking about them. Plus, if you go to the revenue is $2,000. They're losing a couple million. Like, the whole company's worth $16 million, and they're losing $2 to $3 million a quarter. That's devastating when you're only worth $16 million. You look at the assets. That's why the assets, that money has to come from somewhere. So the assets just close down. I can 100% understand why this stock is at an all-time low, because the numbers aren't like, there's honestly there's bankruptcy risk here. Like, there's that goes to zero. Like that. Okay. Let's keep going here. Wait, I saw something up here. Where was that? Oh, Serve. Hey, what up, Mills? Said SERV. What up, Mills? Hope you're having a great Friday. Let's see. Serve Robotics. Now, oh, wait, check this out. Let's go read this article up here. Soars of this food delivery robot maker are soaring. What DoorDash has to do with it? Okay, wait, hold on. Serve Robotics popped on Thursday after AI-powered food delivery robots unveiled a multi-year partnership with DoorDash. Now, I hope this is a real one. Machines have completed more than 100,000 deliveries year to date. Now, that's interesting. Serve says its machines, the agreement with DoorDash, okay, some sort of food, if we don't need a human to deliver the food, this is the future. And, that's weird. What's weird? This company just partnered with DoorDash, but the largest shareholder is Uber. Uber owns 8% of the shares. So the great fundamental balance sheet looks like no debt at all on this company. Let's see. 180 mil of cash, no debt. They're losing a bit of money, but probably normal. So they have no revenue now. It's, 600,000. But it looks like analysts are expecting 2 million. So the future looks bright. A lot of momentum. It might actually be fair. We'll actually put them on the watch list here. So that's actually interesting. We'll have to see if. So anyway, Uber is the largest shareholder, which I love. So it's kind of backed by them. And so they could also, after partnering with DoorDash, they could partner with Uber. I mean, Uber's the shareholder. Anyway, I actually like them. Again, I wouldn't have it as a huge, meaningful size position, but that one's pretty cool. What stock is a good to buy during the downturn? Hey, a stock I bought today was MUSA, Murphy USA. It's an oil play. And then another stock that usually does good whenever tech is going down, and you can probably see the only green stock in here, on a day where everything else is red. This is why I like having a diversified portfolio in different sectors. McDonald's, for example. McDonald's is actually seen as recession. I call it recession proof, but I say recession resilient for yeah, no. But if you look at 2008, they were actually the best performing stock in 2008. McDonald's and Walmart basically didn't fall because actually in a recession, McDonald's does good. Historically, sales go up in a recession at McDonald's. People stop going from Texas Roadhouse and Chick-fil-A and they go to McDonald's. Also, they just brought back the monopoly stuff. The value is back in McDonald's, in my opinion. With the $5 meal deal, $5 breakfast meal, $8 Big Mac meal, they really have brought back the value. And this isn't even a restaurant company. This is a real estate royalty company. This is why I love them. I've done too much research. I own, this is my third largest holding. I have 5K of them. But if you go spend $100 at any McDonald's, $4 of it goes back to the parent company as legit a royalty. That's why if you go to their gross margins, no other restaurant has this kind of gross margins because, again, they're not a restaurant. They're a real estate royalty company. And 70 or 60% gross margins, 33% net margins. Again, they collect the royalties and they own the real estate. They own the land under 80% of all the stores. They actually, if they converted to a REIT, they'd be in the top 5 largest REITs. But they chose not to. So your dividends are qualified. So they are tax free for me. That's what's so cool. Like a lot of people don't know this. And again, not an expert, but this is my taxable account. This is my taxable account right here. Whenever I receive a dividend from McDonald's, let me actually pull that up right here, like dividends. All these dividends I receive from McDonald's are actually completely tax-free, even in my taxable account, because McDonald's pays a qualified dividend, and qualified dividends are taxed at long-term capital gains. And if you make under 50 or 55K a year, which is me, I make well under that. If you make under 50K a year, long-term capital gains are completely tax-free. So like another thing, if I went to sell all my Meta shares, because I bought all my Meta over a year ago, if I sold all my Meta shares right now for a 35% gain, all of it would be completely tax-free because I've owned it for over a year and it's long-term capital gains and I make under 50K a year. Anyway, hey, thanks, Devin. I appreciate that. Show crypto. Hey, I actually do not got crypto. Okay, here I like being fully transparent. Dang, this portfolio is down 4% today. So anywho. Here's us year to date too. Someone said year to date. Yeah, here's us year to date. Yo, we're falling today on tariff news. That's exactly why the market fell in April. It's like April, well, not all over again, but we're starting to see some more of that tariff fear because the market does care about tariffs. Yo, this was a great time to buy, or not even, as long as you just didn't sell in April, you're doing amazing. I was down 14%. Now we're up actually, look at, this is the best example. If we go to this portfolio right here, year to date, we were down more than the market. We were down 16% and the S&P was only down 13. So we were down more, but look at this now. We're up 61% on a return money weighted average just year to date. And the S&P is only up 12. And that's mainly because we just are in the right stocks. During the dip, we took advantage. Why is EME on here? We took advantage. We bought a bunch of Comfort Systems. We bought a bunch of Amphenol Group. This is like Corning. This is your optic, your optic play right here. Nvidia is pumping Amphenol's orders. Or anyway, there's them. All right, let's keep going here. Stocks are so fun. Hey, what up, Trust? Bank earnings report. Yeah, the next couple weeks, really month is going to be fun. We got a lot of earnings, so let's go. What broker are you using? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's all the apps I'm on, all these apps, if you wanted to get any of them, they're all in the link tree in my bio. This one's my favorite one, though. If I was just getting started, this is the brokerage I would get to buy stocks on. This one's called Moomoo. It's in the link tree in my bio, the very first link there. It's also an affiliate link, full disclosure. So if you actually go and deposit $100, we'll both get like some free stocks. So help out the channel too. But someone said Ford. You know what? Speaking of free, that's what I actually got when I started this account. When I opened my brokerage with them, they gave me a free share of Ford, and I sold it right here. There's no buy order because they just gave me one, so there's the sell order though. But Ford, speaking of Ford, what's up, man? Unfortunately, Big, I would not own or trust Ford in the long run. Like if we go back to 2001 or even the year 2000, Ford is basically, it's more than 50% down than what it was in the year 2000. Ford was $25, now it's $11, but you're mainly buying Ford as a dividend play. So if we go to the yield right here, this is insane. 6.5% dividend yield. But again, I do not expect this to really outperform, the tech heavy S&P 500 in the long run. But yeah, sales are up 4. Last quarter they were down by 4. I know they're making the electric like Ford Lightning, or the net income was negative. Was that real? Dang, no. That profits really dipped by 72%. I don't love this industry. Okay. APLD. You know what? Let's go over APLD again. That's one in the Nvidia portfolio. Let's do it. So, what do you think of eToro? Hey, what's the ticker symbol for that one? We'll check it out. Okay. Remind me, Eric, to look at DKS. McDonald's is real estate. Yeah, you're right, Joe. McDonald's is a real estate royalty company. They own the land under 80% of all the stores, which is so cool. So even in a recession, McDonald's still collects rent from every tenant every month and the royalties. Hey, Meech, no way, homie. Meech for the 25 roses. I really appreciate that, my friend. Can we look at CELH? Yes, I love Celsius. Big stake from Pepsi. Remind me to look at them. Well, I'm getting so distracted. Let's get back to CoreETH. And Dave, remind me to look at CRWD. Is that CrowdStrike? I love CrowdStrike. So here's APLD. They had a partnership, or let's see right here. Number 2 right here. APLD secures 112, or no. Wait. APLD reports Q1 revenue of 64 million, signs 11 billion in data center leases. So yeah, this is like a data center related stock right here. Yeah, if we look in the middle here, data center hosting business. And I think they either just reported earnings today or today. Here's what they reported. This is why the stock is gapping up so much. If you go to the analyst expectations, analysts expected 45 mil and they reported 65 mil or 64 mil. That's a huge, and they beat on net income losses too. Analysts expected -13. They only lost -7. So that's great numbers. No wonder the stock is gapped up. And yeah, the earnings were today. That was today. Wait, let me zoom in here. Yeah, that was today because the blue dot is at the bottom there. So yeah, they just had good numbers. So let's look at Celsius right here. Celsius is the growth is back for this company. The reason they were struggling down here, the reason they basically went from $100 all the way down to like 25 is because analysts were concerned about Celsius's growth. But they just fixed that by acquiring Alani. So if we go to the largest shareholders, Alani owns 8.7% of all the shares. So that's why the assets just basically from this quarter to last quarter, they just went up so much because that's when the merger went through. That's when they bought Alani. So the revenue's up 83%. Again, a lot of that grows from Alani, which I love. I love the Alani brand. It was a great acquisition. And they're not just making revenue, but also net income. 100 million net income this quarter. And there's some more good news. Pepsi just took about 6-7% stake in this Celsius as well. And Pepsi is giving them Rockstar Beverage. If you heard of Rockstar Energy before, like a Monster competitor, they're giving that to Celsius as well. And also Pepsi is the one who manufactures and distributes the Celsius bottles and everything. So good relationship for Pepsi to take a stake. Great news. So let's look at DKS. This is Dick's Sporting Goods, a surprisingly good performer with good dividends. So check this out. Since 2019, it was $52. Now it's 200 on top of the dividends. Like even if you buy this stock right now, you're still getting a 2.15% dividend. That yield is very nice. They also just acquired Foot Locker. So they acquired Foot Locker, which is cool. But yeah, check out this net income. They're easily making, if you average it out here, like 300 million of net income a quarter. So yeah, that's surprisingly good. What's the multiple? Let's go see PE on this company. PE is a 15. The industry average is a 20. So they're trading at a below industry average. What's their competitors? Or average Tractor Supply, Ulta Beauty. Well, those are kind of the competitors. Yeah, Best Buy, Casey's. Yeah, okay. Yeah, hey, Andy, we can't cover DKNG because last time I covered it on TikTok, they took me down. So sorry. T-Mobile and McDonald's holding it down. Yeah, T-Mobile was up. And if we go over here to my portfolio right here, notice the only thing green in here is McDonald's today. Yeah, RIP the market. Oh, is Nate still in here? Yo, Nate, are you here? Because I'll look at Meta. I forgot to get to Meta. Dang it. Bonds are up today. Let me go check out my Roth IRA. Yeah, here's us on the day. We're down 1.6%. Drop a like on the stream for me. We're struggling today. Yeah, every stock in here is down on the day. Anywho, we also bought some shares today. We bought for the first time ever MUSA. Murphy, I'm about to make a whole video about them. And Ferrari, I bought Race Ferrari. I'm already down 5% on them. I love it. So, oh, hey, yeah. What up, Luffy? Yeah, Futu, another really interesting name right here. Yo, if we go to this portfolio, another one. Look, we're down 4.4% on the day. I just love being fully transparent. Just know I'm sharing the L's with y'all today. Jeez. Yeah, UiPath is down 7, AMD's down 6, Futu's down 10, Robinhood 8, Supermicro 8, SoFi. So this is rough. Hey, what up, Josh? Yeah, we're seeing a lot of tariff talk today. Basically escalating conflicts between us and China. Look at that. Hey, if anyone's who's been on my stream for a while, hey, like Luffy, Coca-Cola Consolidated. I've been pumping this, basically shilling this company for a while. It's doing great. Congrats if anyone owns Coca-Cola Consolidated. They're up 2% on the day. You know, these defensive names, McDonald's, Coca-Cola bottlers, like, do good kind of when tech's done. That's why I like having a diversified portfolio. That's also why I bought some MUSA today to get exposure to oil, and Ferrari for the high net worth individual exposure, because the Ferrari net worth individuals, if Ferrari has to raise their prices 10% because of tariffs, they'll pay it. Okay. So I am doing some more research on Ferrari. Their numbers just impress me. You get a growing dividend, basically a 1% yield or 0.9% yield. They raise their dividend every year to keep up with inflation. They're making a pretty much 500 mil in net income a quarter. They're doing 1 to 2% in share buybacks. They're reinvesting in the company every quarter. So race is cool. And you could get in 5.25% lower than me. So there you go. So let's do CrowdStrike. What up, Dave? So CrowdStrike, you know who actually owns CrowdStrike? It's one of my favorite cybersecurity stocks out there. Is the homie, the genius, I should say, Nancy Pelosi. Let me pull this up if it'll work. Snapchat stock. Hey, maybe we'll pull up that one. It's not really that bad. Yeah, I agree, Josh. You know, we're a couple percent off all-time highs. The S&P. We're not in. If this is the worst pain it is, then there was no pain at all, basically. But yeah, here's CrowdStrike right here. This is one of my favorite cybersecurity names. If you look at a lot of software, you know, Adobe, Salesforce, a lot of the software names are getting smacked, but I believe cybersecurity is almost immune to the AI thesis, like hurting them, because as AI gets better, hackers will get better hacking, and we're always going to need cybersecurity. If you didn't know, this is one of the main cybersecurity names. I think over 80%, I kid you not, 80% of the S&P 500 uses CrowdStrike subscription, but they're still facing, the reason their net income is still went to negative, they got profitable, but they're still seeing those lawsuit payouts from this outage, still seeing lawsuit payouts. So that's why the stock gapped down. Anyway, I love CrowdStrike and the industry. What app is this? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is a software where you get stocks on. It's my favorite one. I bought a put on the S&P. Hey, what up, Daniel? Good luck with that. You know, you're not crazy probably doing that at all-time highs. I'm not good. I haven't done any options in over a year. I'm not good at it. Oh, well, here's another way. If you wanted to bet on the market going down but don't want to buy options, you have to have a plan to get out of this. But SQQQ is one, and again, these mathematically these always trend to zero, like just how math works with these triple leverage. But anyway, let's keep going here. Nicole said, why? Let's hope I can find this one. YORKF. I type in YORKF. Unfortunately, I cannot view that one. It must be like an international stock, and I might not be on my exchange. What up, Brian said ETOR. Hey, what up, howdy? What up, AGA? This howdy, man. Let's see. eToro Group. Yikes. UiPath did really good for me today. Hey, if you had a put on them, you must have printed on that, because I'm down 8% on UiPath today. They're actually one of my biggest losers. Check this out. Yeah, we're down 175 schmeckles on UiPath today. Drop a like for me. By the way, best way to support me is just hit the like button and subscribe. I sell nothing. I have no course, book, WhatsApp, anything like that. So watch out for people impersonating me. I'll never follow you or DM you or try to sell you anything. But check out the top right here. This is eToro, $3.2 billion company. And unfortunately, the stock is at an all-time low today. So let's go try and figure out what happened there. So trading activity. Let's see, Israel. So do beware, all of this company's revenue looks like it comes from Israel. Maybe it's some trading firm. Net income is positive, but look, the net income fell by 1.3% year over year. And if we go to the revenue's up by 13. We don't get much. Oh yeah, they just IPO'd. So again, this company just IPO'd. So it looks like some Israeli trading firm with a good balance sheet, probably from the IPO, from their proceeds. But they're making net income, which is good. So profitable company. All the revenue comes from Israel. So I wish I'd give you more thoughts on them, but what's a good buy right now? Hey, well, not financial advice. I bought some Ferrari. I'm down on it. And MUSA. What is this app? Yeah, hey, again, if this is a brokerage. If you want to get it, it's in the link tree in my bio, first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. Yes, sir. So what up, Apple user 35? Hope you're having a great day. Thanks for that. If you got a stock you want to look at, let me know. CoreWeave. Yeah, let's do CoreWeave. So CoreWeave is in the Nvidia portfolio, basically call option from Nvidia on CoreWeave. You know, Nvidia, 85% of Nvidia's portfolio is in CoreWeave. And hey, shout out to the coffee man, Maddie. No way. Dude, thanks for the 25, Ron. Shout out to Maddie on the YouTube stream. Hope you're having a great Friday, friend. How does SQQQ work? It's basically just inverse QQQ triple. It's such a trading vehicle. But let's look at CoreWeave right here. So CoreWeave, this is the data center play. Check out this is just a pure growth company. Like, check out the revenue. Revenue went from 400 mil to 1.2 billion, a 3x increase. But it was a record this quarter. The revenue was 1.21 billion. Look at what the analysts expect. 1.21 bill this quarter. In 2 quarters, it's expected to be 1.79. And CoreWeave also has gotten a load of orders, new orders from stuff. CoreWeave acquires Monolith AI. CoreWeave maintains $9 billion Core Z acquisition. Oh, yeah, they're acquiring Core Z. It's that Bitcoin mining company. Anywho, there's a lot of bullish news, sentiments in their favor. NVIDIA also agreed to buy back basically the unused chips that CoreWeave buys. Okay, so what up, Jojo? Hope you're having a great day. People keep saying DKNG. I can't cover DKNG. Or I want to, but I don't want to get the stream taken down. I can't cover that industry. Okay. TNYA. What up, Eric? He said, wait, what is this one? TNYA. Let's check it out. TNYA. Yeah, hey, APLD and CoreWeave were both going crazy. So this is Tenya Therapeutics, extremely small microcap. So a $300 million company. So do beware, it's an extremely small company, but the momentum has been all right. It's been pretty good the past couple weeks here. Let's go look at their earnings. So this is a startup, or yeah, it's a biotech, and they just don't sell anything. Maybe they're not FDA approved or something, but if we go to the revenue, it says 0 because they've never sold anything. They've never sold a product or a service, and they lose net income every quarter. So that's why the balance sheet trends down, but they have been able to, last quarter they issued 50 million of shares. That's why the assets went up that quarter on no revenue. So anyway, we're basically just waiting for this company to finally start selling something. There's a lot of hopium, and you got to be so careful with this one. It's almost speculation, but you can momentum trade this one. But yeah, as soon as they start selling a product or actually get some revenue, I think that'll be a good transition point. Maybe I'd wait till then. Application name. Oh yeah, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is a brokerage where you get stocks on. Rich Tech Robotics. Okay, Rich Tech Robotics. This is another startup, or here's I'll check this out right here. Can I get this on desktop? Oh yeah, you can, Eric. Yeah, there is a desktop Moomoo version. Yeah. But check this out. If we go to Rich Tech Robotics, this is why I find this one a little hard to trust. I like Serve Robotics better. They're also a startup, but that one has more foreseeable revenue. But like Rich Tech Robotics, Revenue's down 18% from the previous year, but it was only $1 million. You know, they're doing $1 million in revenue a quarter. They don't have any real IP or patents. If you're just looking for a robotics play to buy and never sell, I wouldn't trust too much money in Rich Tech Robotics, or if not any. So, Kraken Robotics. Hey, what up, Steven? What's the ticker symbol for that? eToro's the trading platform I use. Oh, hey, that's cool, Brian. Yeah, hey, invest in what you use. Let's see. DLO, D local. Oh, hey, let's do this one. What up, Ian Route? How about WPM? They're the gold. Hey, we'll check out WPM after this. Tenya Pharma only has phase 1 prescriptions. They won't be selling anything for the next 5 years at least. Okay, so going back to Tenya Pharma, someone said, Rick, here, that they won't sell anything for 5 years. So be prepared for a while just to hold. But here's, if you're in that one for the long run, but here's D Local right here, a $4 billion company. Let's go check them out right here. So transaction revenues. So it's like a fintech. Yeah, the growth's been very strong. Where do they get the revenue? So do beware. This isn't a bad thing. This is like an international play. You know, 20%, 21% Brazil, 21% Mexico, Egypt, Argentina, Chile. So all these other countries. But yeah, that's why they gapped up on earnings on this day so much, because the earnings really beat what the analysts expected. The orange line is what they expected. They expected 229. They reported 250. They beat on net income as well. So they just beat on all the yeah, sales are up 50% year over year. That's amazing. So some sort of transactional company, cross-border maybe. All right, WPM. And then about Cormetics. Oh, Cormetics. I love Cormetics. Remind me to look at them. I want to get to them too. I do own Cormetics. I am down like 20% on them. What's the stock symbol? Oh, hey, what up, Steve? For the last stock, it was DLO. Yeah, hey, by the way, if you missed anything, I'm streaming on YouTube and you can like rewind and see what you missed. But yeah, here's Wheaten Precious Metals. Yeah, all-time high, probably because gold is at an all-time high right now. Let's see. Yeah, these are the actual mines that they own, so pretty cool. They're all in Brazil, Peru, Mexico. Let's go to net income is really good. A couple $100 million net income a quarter. If you just look at the actual commodity of gold, IAU, it's also at an all-time high. So yeah, guys, if you're in any gold, it's done amazing. What app are you on? Hey, what up? If you want to get this app I'm on, this software, it's where you get stocks on. It's in the link tree in my bio, the first link there. I love this app. All right, let's look at Cormetics right here. So I normally don't cover these kind of stocks, but because they're tiny and risky, but I actually own this one. Full disclosure, I own this one. And here's what convinced me. And as much as I love this one, and I think it's a 3X, I only have $200 in this name. I wouldn't trust a lot of money in this name. But here's what I love about them. If you look in the top right, the market cap, they're worth $827 million. So the whole entire company is worth $800 million or $827 million. And they literally have $190 million of cash and no debt. So it's a debt-free company, no debt on the books. 25% of the entire company, the market cap is just their cash on hand. So what are you left with? Well, you're left with a company that's growing so you're paying $600 million market cap for X cash market cap for a super growthy company. The sales literally went from 800,000 to 39 million, and added this 39 million. 19 million of it was net income. They literally have Reddit type margins, better than Reddit margins. It's incredible. 50% net margins. Like, this isn't some one-time adjustment. This is real net income. And the analysts are expecting, again, net income is EPS, or just net income per share. EPS is expected to go from 28 to 73. Net income is supposed to double. Like, everything here is headed in the right direction. There is some risk, of course. They only sell one product right now. It's called DefenCath. Like 60% of their sales come from one hospital group. There is risk. Their patent expires in 2033. So there's definitely risk. But here, I'll show you my position, by the way. We go over here to my Roth IRA. They're in my Roth IRA. Actually, I got 22 shares, and we are down at 20% on them. Why is everything red? Yeah, what up, Nash? Yeah, everything is red because of the more tariff fears. Whoa. Q's just tanked. Oh, wow, we're seeing a little recovery, but they were just down 2.6. Under $600 Q. That's crazy. Yeah, Hood's down 6. Bonds are green, of course. Yeah, that's why McDonald's is green, All right. Yeah, McDonald's is a good kind of defense name. It does kind of good in a recession usually. What up? JC said try VSA stock. What's VSA? PNG, tech, and AI. Yeah, IDK, you're right. Do you know any finance ETFs? I actually don't. Remember we found that one bank ETF that one time? Market cap weighted bank ETF, and it was like really good. Like that one was interesting, or kind of finance related. But I like to pick and choose my finance names. I'd rather pick and choose, Futu, SoFi, Robinhood stock, all individually. Or Dave, and I do. I own all those, Dave. But here's VSA, Vision AI, a very small company. If you look in the top right, they're only worth 130 mil. So, and they're Chinese as well. So first off, we'll convert their currency from Chinese yuan to USD. So 100% of the revenue comes from China. So that's not great. Do they have sales though? So not really. That's rough. Yikes, that's a bad balance sheet. They now have no assets. Look, their assets... Yo, that's rough. Wouldn't trust my money with this one. Revenue's down 22. They're momentuming probably just because everything is right now. But before this little momentum today, I can totally understand why this stock was at all-time lows. I'd be so careful with this name. Be really careful. I would swing trade that or something. So PNG, what is PNG's? Oh, Kraken Robotics. Okay, yeah, wow, look at this one. Now this one, that's a great chart. That's real all-time highs. They're a $1.7 billion company. They're a Canadian company. We'll convert that to USD. So product sales, so that's grown very nicely. In 2022 was 18 mil. Now it's 46 mil. Their services revenue has also grown nicely. It's still risky because they just don't have much sales. I would need to do more research. Like, do they have any real IP or patents? Do they have a moat? I don't know. But wow, were those real profits? I really want this to load. I need to see if that was real because on net income, it says they made a bunch of net income last year. Wow, they were making a lot of net income. Let's go find out if that was real. Maybe it was just interest. That was real. So they really are making net income. It really did fall 81% year over year, though. So the margins are falling a little bit, but they're still profitable. I don't know. It's like a mixed bag. I don't know if I certainly wouldn't buy them here, but they're interesting. I like that they have sales. They're definitely better than a Rich Tech Robotics. S&P 500 and SCHD are in deep red. Yep. We all feel your pain there. Yeah. We bought a new stock today. We actually bought an oil stock for some defense. MUSA Murphy. They're up on the day. And then we bought some race, which we're already down 5% on. I plan on adding more to that position. Hey, Comfort Systems is slightly green on the day. At least that's good news. Coca-Cola Consolidated. This one's at a new multi-month high. That's good news. I've been talking about Coca-Cola Consolidated for a while. Oh yeah, what up, Jasp? Let's get to Snapchat. I wanted to get to this one. So this one has been struggling, basically the same as their IPO price in 2018. So the stock's been flat for, 7 years. But here's a cool metric we get to see, the daily active users. In this quarter, the daily active users were 469 million. This exact same time last year, it was 432 million. So they gained an extra, 35 million daily active users on their platform, which is good news. But they're still struggling with net income positivity. I mean, they got close to net income positive that one quarter, but they went right back. They lost 260, 150. Like, it's tough. The sales are slowing a little bit. Sales are down, sales are up 8.5, but it's not double digit anymore. Tencent's the largest shareholder. We really want to see this company, like, just for all of eternity. Like, this company is just burned hundreds of millions a quarter and just can't get profitable. So management hasn't been great. The old CEO cash grabbed this company, made billions, and then quit out of nowhere. Left management. All right. But I wouldn't buy them. I'd really want to see them get to net income positivity. CEG, are they too hyped? I kind of like to grab a couple stocks from them. I know. Yeah, so CEG, this is one that I'm like biasly, I'm a perma bull on this stock. Like, this stock is going up. Like, this is the best like AI infrastructure electricity play. Like, everywhere is running out of electricity. They can't they want to accept data centers, but they can't because they don't have the electricity on the grid. CEG is the main nuclear play. Like companies don't want to burn coal. And so like they want nuclear clean energy. And I really think nuclear is the future. And this is an unregulated nuclear utility. This is the largest pure play for nuclear. This company literally owns 30% plus of all the US nuclear reactors. So it's the largest pure play. There's not even a close second. I mean, Vistra Energy would be second, but they're like still 80% behind in terms of number of reactors. But yeah, pretty much best nuclear play in my opinion. You get dividends. Stay away from Oklo. Stay away from the SMRs, the small modular reactors. There's only 3 working small modular reactors in the world. None of them are in the U.S. I would pick CEG as the best one. Oklo and all these other ones are also at all-time highs. I'd rather buy CEG at all-time highs. Hey, what up, Nathan? What up, dude? And Jerry said BURU. Oh, that's that momentum stock. So here's why I would stay away from this stock. Ooh. Here's the bad news. If we look at the top right, the market cap is 60 million. So first off, it's just not a company I'm interested in terms of market cap. So if you're doing anything with the stock, it's to hopefully swing trade it. You're not buying this to You're not buying this to hopefully outperform the S&P in the long run. Like you're really hoping for, you're speculating here. But here's the thing: like the revenue-less company, revenue is 9,000 the last quarter, down 97%. Like look at this is bad. Liabilities they have no assets. The assets are 2.4 mil, 47 mil liabilities. Again, the whole company was worth 60 million. They lost 12 million this quarter. That's 20% of the market cap. And then another 16 mil, then 12, then looking at their financials, everything's headed in the wrong direction. There's no revenue. They're burning through 25% of the market cap a quarter. There's no assets. So just be careful with that one. Hey, what up, Looney? FDIS for more fintech angle. Let's check it out. FDIS. This is the Fidelity Covington Trust. MSCI. Oh, so they give MS. So you see MSCI in the title here. We could also look at MSCI stock. But let's see what it owns. It owns, I actually like this. Its largest shareholder or largest share is Amazon, but then it's Tesla. This is this is the consumer. This is not a fintech one. Or did I type it in wrong? No, this is your consumer discretionary ETF. So yeah. So this is actually a perfect discretionary ETF because it's Amazon then Tesla. Super discretionary. Then Home Depot, McDonald's is on there. Let's go. TJX has been doing insanely good. Look at that chart. Better than Nvidia. Starbucks. Anyway, they're interesting. I agree. Nuclear power, it's so much more cleaner. Yeah, I really like. We're coming out with new ways to refine the waste. Nuclear or CEG has the super industry low downtime. Like there's downtime days for nuclear reactors, and they have their update. It's 98.8% of the year they're up or something. Why did you choose Raise? Hey, what up, H? Yeah, hey, for their financials. Good numbers. I like this one. It's a valuation I can get my head around. Good dividend, insane share buybacks. I love the industry. I love their sponsorship revenue. So I'm gonna actually, if you want to learn more about Race, wait a day. I'm actually gonna make a full YouTube video about why I bought Ferrari. And another stock about today was Murphy USA Oil, MUSA, for the first time ever. So. Let's see. Oh yeah. Hey, what up, Trusty said BAESY. Isn't that BAE Systems? So that's that aerospace and defense company. Oh, hey, what up? We'll look at what up, Evan. Remind me to look at TPC. I want to get to that one too. And we'll look at Zeta. Or Zeta. So here's BAE Systems. Let's see here. Electronic systems, air, maritime platforms and systems. Let's see, cyber and intelligence. So this is an industry a lot of people like right now. Half the revenue comes from the U.S. 47% of the sales are in the U.S. Let's see net income. Yeah, look at these net income numbers. They're making net income every quarter. But again, this is this isn't in USD. This is a UK company, so we're going to convert their currency from GBP to USD. So yeah, they're making this is for the full year. They're European or British, so they report in halves. They don't report in quarters. So for the first half of this year, they made 1.4 billion. So anyway, international or British aerospace and defense play. So hey, what up, Slow Mobius? D-Man said Path. Yo, I'm down bad on Path. We'll get back to Path in a minute here. So this is Tutor Perini. Almost at the .com, or no, 2007 price. Okay, let's see what the numbers are. They've done amazing since 2019. Or wait, where's 2019? 2019 is right. Oh, that's the COVID low. Okay, let's see. What do they do? So civil, well, that revenue is up 35% year over year. What is this industry? Engineering and construction. All right. Building revenue is up 12. So they're really interest rate sensitive. Like 2008, I'm guessing building's interest rate sensitive. Let me check revenue right here. So revenues, yeah, this is good growth. Revenue's up 21% after it grew 10 after it fell in 2022. But they made net income the past 2 quarters. That's good. It's a little choppy. But the stock's done amazing. That probably wasn't too helpful. I apologize. No dividend on this company. But yeah, this is a building play. Let's see. Specialty contractors. That's up 8. Anyway, you're right. That's a contract. He said it's the biggest U.S. contracting company. Just bought 130 shares. Nice, Evan. Yeah, I do like their growth. I don't know if they're interest rate sensitive, but maybe as we go into a lower rate environment, they'll benefit. And if we actually go look at and bonds are rallying today, pretty much affirming that the interest rate cut. But if we go over here, I can show you down here the actual interest rate cut probability. And for October 29th, so literally not too far away, this month, there's a 96% chance of a 25 basis point cut on October 29th. So anyway, what app are you using? Yeah, hey, Brick, if you want to, by the way, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. And it's an affiliate link too. So if you go and deposit $100, we'll both get some free stocks. I like this one because it's the most useful. Oh yeah, and you can see like the institutional trackers. You can see what Berkshire Hathaway's doing, ARK, all the different fund managers. Oh, and if you are looking for like, hey, I can't find stocks to invest in. They have so many like watch lists, like nuclear, Fed cut beneficiaries. I mean, it just goes on. Cloud computing, SaaS, data storage stocks, stablecoins, safe haven assets like gold, rare earth stocks. There's so many like different industries. Drone concept. Anywho, let's keep going here. Ooh, I will go to watch all NASCAR. Hey, what up, Jason? Good to see you. Sold some of my Big Bear AI. Yo, applesauce. Good to see you, brother. No, don't worry about it. Can we look at LAES? Yeah, let's do it. All right, let's get out of here. LAES. LAES. Yeah, what up, applesauce? LAES stock. And by the way, if y'all want to hit the follow button, we stream every single day. We just look at stocks and stuff. And what up, Francisco? Can we look at Airbnb? Let's do Airbnb. Yeah. So here's Seal SQ. This is an $880 million company. Let's see. Oh, at the top here it says most shorted stocks. Let's go check the short interest. I am curious. Okay. 15% of all the shares are being shorted. So there is definitely some huge bear thesis on this company. Let's check this out though. Here's some news. CLSQ reports 9-month revenue of 9.9 million, partners with TSS for quantum defense solutions. Pretty cool. So what's their revenue right now? So, okay. So that's good news. Revenue is going to go from 4.8 to 14.9. That's a good little 3x increase year over year. So yeah, the revenue's doing bad now, but I guess the future is looking bright. I'd still be careful with this one, of course. There's a heavily shorted, they're only worth 800 mil. But momentum's in, the quantum names are on fire. Anything interesting? F&B stock? Food and beverage. I like McDonald's. McDonald's is the best one, Toaster. Wingstop copied the McDonald's model, and it's genius. That's why Wingstop is another one I really like, because if you didn't know, these restaurant companies like McDonald's, if you go spend $100 at McDonald's, $4 of it goes back to the parent company as a royalty. And here's Wingstop's numbers For Wingstop, 44% of Wingstop's revenue comes from their royalty revenue, which is pretty cool. From if you go spend $100 at any Wingstop, I think $5 of it goes back to Wingstop parent company. And then they have their company operated shops. That's the small. I like that it's the smallest portion, like McDonald's. McDonald's barely owns any corporate owned stores. They're all franchised, so they collect the rent. Or they own the land, so they collect rent from each tenant and the royalties from every tenant. Company owned. Okay, anyway, that's Wingstop. Again, the whole restaurant industry is struggling right now. Like, look at Wendy's. I much rather buy Wingstop than some of these other grocery stores that don't have the same franchise model. Like, dang, Wendy's. There may be a day where we never see a Wendy's again, or some stores. Wendy's is lower than it was in 2008. It's not Jack in the Box, dude. RIP some of these restaurants. Jack in the Box owns Del Taco as well. Krispy Kreme might go bankrupt. They're only worth like $400 million now. Krispy Kreme's at all-time lows. Like, hey, thanks, all blackout. I appreciate that. Hey, what up, Jay? Good to see you. So let me get to Airbnb right here, and then we'll try and get to Pepsi too. So Airbnb, like, do they really trade at 28 times net income? Let's go verify that. So, or did they have some weird one-time adjustment? No, like they're really trading at, that's a fair valuation. 28p. I know some countries like literally are banning Airbnb. Like I know when the Olympics happened, and I forgot the country, but that country like no Airbnbs were banning it. But I love the business model. Every time you just go and book something on their platform, they just collect a high margin little fee. It's kind of like Uber or DoorDash or, these other like Spotify. But look at this. I mean, they're easily making, if you average it out here, like 500 mil plus a net income every quarter. So, and then they're really trading at, I think that's fair for a software name. What's the sales growth? Let me go to total revenue. Revenue's up 12 after it grew 10, after it grew 18, after it grew 50, after it grew 300. So they're on a streak, it looks like. Oh, Texas Roadhouse is a good one. Oh, my bad there, Mills. Let's get to Zeta. Zeta Global. Is Progressive still a buy? I think so, Steven. I wonder if they're up on the day. They're probably not. Yeah, look at that. They're really pushing the crypto on this app right here. So that's good for Webull stock. But let's see. Progressive is down on the day, but look, Progressive is only down 0.3%. So Progressive is that insurance company, and I do like this one. I own 3.8 shares of them. I would buy them here. So here's Zeta Global. Let's check it out right here. So what's your opinion on airlines? Yeah, the airlines just don't outperform the S&P 500 in the long run. So I just don't look at them. They're federally regulated. They're just not that good of a business model to like get market beating returns, I think. But they're fun to trade. So let's check out Zeta right here. I like this one for the growth. Revenue's up 35 after it grew 32, after it grew 25. So they're on a streak of growth. They're deleveraging their balance sheet. Like assets are, like especially compared to a year ago, look, their assets rallied up and their liabilities went down. They're narrowing their losses. Then net income losses narrowed by 55%. So I bet you by the same time next year, they're going to actually be making, the next 2 quarters are expecting net income positive both quarters. So pretty much for the rest of the time, hopefully this is just a forever net income positive company making net income for the rest of the time. The market is starting to rebound a little, or at least this portfolio. We're only down 0.05% on the day because of comfort. Like this is what's so cool. This HVAC play, Comfort Systems, the tech heavy market is down 3% today, but something that's just as growthy and techy, but is up on the day, even though they're just an HVAC company. But don't be fooled. All our other portfolio is down bad today. We are down 3.6% in the day there. Actually, let me go check the Qs. I think we are seeing a little rebound. We are seeing a rebound. The Qs are only down 2.2, Okay. We'll look at some more here. Hey, thanks again for the gift there, all blackout. Let's get to Texas Roadhouse. Or should we look at, hey, Todd, do you want me to look at Texas Roadhouse or an airline? I think JETS is like the air. Here's the thing. Let's go look at the whole industries. People are talking about industries. I think JETS is an airline. Yeah, the U.S. Global Jets ETF, and the whole entire industry. This ETF is lower than it was in 2019. So the market since 2019 is like 2x or 3x even. If you bought this, you've lost 30% of your money, which is devastating. Um, let's see. Please do the metals company. Hey Jay, that's a pure. We can speculate on this one. This is a momentum play. So, oh wow, the momentum's been insane on this name. Actually, I wonder if they might actually, if they're actually gonna finally get going. But yeah, if we go to the revenue right here, I guess again it's a startup right here, proof of concept. They want to make these underwater like machines that suck the minerals out of the water at the very bottom of the ocean where it's most dense or something like that. Like suck the nickel and cobalt out of the water and sell it. But again, they haven't done anything yet because if you go to the revenue, it says no data. And it'd be cool if it actually worked. They're losing a lot of net income every quarter. So we kind of just want to see this company actually like sell something. They might never actually get able to do it, but they're interesting if they can actually execute. But you're especially at all-time highs, like the risk to reward. I mean, you're really paying for some hopium in the future, like more so than like Tesla. Like, yeah, I would trade that one. I don't know about trust in it as a buy and never sell. Check out the ARK Space Innovation. Hey, I don't know what the ARK Space Innovation is. I know that there's the ARKK ETF, or let's see, featured. Find more. Wait, ARKK management. What is this? You can see your newest positions or something. Yeah, that's not. Wait, that's in the Kathy Wood portfolio. Anyway, is it ARKQ? Wait, ARKQ. That's the ARK Autonomous Technology and Robotics ETF. So here's your. Wow, it's at an all-time high. Let's see what it owns. Because, it owns Tesla. That's seen as a robotics play. Kratos, that's a drone play. Defense one. Teradyne, that's a robotics play. I actually like them. Palantir, AeroVironment, Archer, Rocky Lab, AMD, John Deere. It's actually an interesting ETF. I'll give it to them. It's a cool one. Yeah, LES definitely a small monster for me to grow. Hey, nice Apple. Raf said TDSA. I know it's EU, but interesting for my country. Wait, TDSA. Wait. Unfortunately, I think since they're European, I'm not going to be able to find them. I can view NASDAQ listed European stocks because, Ferrari is a European company, but they're NASDAQ listed. I don't know if I can't find that one. I did look. Sorry. Hey, Haydex store. Dude, thanks for the roses there. When to re-enter SoFi? Well, the ideal thing is to just never get out of SoFi. You just want to buy and hold. Actually, it is a good one. It is. I wouldn't call you crazy if you trade this one because it does move a lot. But for me, dude, my biggest mistake is selling out of shares of SoFi because I only have 24 shares left. I sold most of my SoFi position at a much higher, much lower than, it's down 5% on the day, but we're still up a monster percent. Same with Robinhood. Biggest regret, like if you go to Robinhood, I sold 50 shares of Robinhood at 36. It's like 140 today. Same with SoFi. So I'm just holding on to these for the long run. SoFi is actually a good company. Like they're not at all-time highs because they're momentuming, propped up on momentum. Like they have good growing fundamentals that impresses me and every analyst. Like analysts did not expect this. They're a fintech with their own banking charter. If you go to their fintech revenue, it's up 105. After it grew 80, after it grew 222, they are on an absolute streak of growth that no analyst expected that sort of insane growth. Like same with their main business, the lending revenue, it's also at a record up 30, but here's what I mean by analysts didn't expect this. The orange line is what the analysts expect. Every quarter they beat on revenue. Every quarter they beat on net income. Every quarter they beat on EBITDA by a huge chunk. So no wonder why they're gapping up on earnings day because the earnings are so good. They did 850 mil of revenue, 100 mil of after-tax net income. I really think people are taking them serious. That being said, would I buy them today? Not really at this price. Like even after this little 5% rally, like I'd be more comfortable, at this gap, like $22 level, I'd feel much more comfortable. It might go there, it might not. High growth stocks, you never know. Like I was like, you wait for a dip on Palantir, but then the dip never comes. So, um, uh, I as much as I love SoFi, I wouldn't have it as a huge position, especially um, if you're just now getting into the stock. I would not make it a big size position. Yeah, waiting. Yeah, I'd wait for a little on them. RXRX AI Pharma. Hey, you know who actually owns RXRX? Speaking of them, and I actually don't like this stock, so it's actually Nvidia. Nvidia owns a bunch of CoreWeave, APLD, ARM, and they own some trash down here like WeRide, complete junk, RXRX, complete junk, I think. But I'll just show you the numbers for yourself, and then you can draw your own conclusion. Check this out. If you look in the top right here, the market cap, $2.3 billion company. Remember that the whole company is worth 2.3. They lost, 180 mil this quarter, 200 mil, 180 mil, 100 mil. They've lost 20% plus of the entire market cap in the past year. And and the sales are nothing. I mean, the sales are, 19 mil, 15 mil. I can't trust this one, Just the fact that they lose as much net income. Like if they didn't lose this much money, like I could get it, but that's bad. I can understand why they're at all-time lows. And the sales aren't even that growthy and that good. Let's see what the analysts expect for revenue. I'd be careful. Or nothing's really blowing me away there. What software are you using? Oh, hey, what up, Anon? Yeah, if you want to get this software I'm on, it's in the link tree in my bio. The very first link there. It's where you buy stocks on. Ooh. Hey, guys, people have been saying Zora. I type in Zora and I can't find that one. Is that the ticker symbol or is that the name of the company? I don't know. Someone said, what'd you buy today? But what I bought today was ticker symbol MUSA for the first time ever. And I actually sold DocuSign. So I kicked the boot to DocuSign, RIP. This just had really no moat. Yeah, there we go. Look, so RIP my DocuSign. Sold it at 71. But we made good profits on this one. Actually, we made a 70% gain on DocuSign completely tax-free because we bought our shares over a year ago, and since we held them for a year, when we go to sell it, it's long-term capital gains. And for me, even in my taxable account, long-term capital gains is taxed to 0%. So pretty cool. Hey, what up, A1 Steak? It's all fun and games. Yeah, it's all fun and games till he brings out another chart. That's funny. I remember that Liberation Day. That was funny. Tanked us. Yeah, we're starting to see more tariff fears again. That's why the market's fallen. So yeah, that's what I bought today. Prime. Good to see you. Mega Ano. Hey, what up, Butterfinger? How's it going? With the 5% dip, you got to be silly not to buy even a few shares. Hey, got a question? What's some good, smarter stocks? Yo, one of my favorite ETFs out there is QQQM. Taxes at 0%, more details. Yeah, here very quickly, if you're in the US, you're not financial advice. I could be wrong, but I pay my taxes in October. I just paid my taxes a couple days ago, so I know it's true, or for me. But if you make under 50,000, or actually the exact number is 48K. If you make under 48,000 a year, which is me, I make well under that. But if you make under 48K a year, and you sell something at long-term capital gains, or if you receive a dividend at long-term capital gains, it's taxed at 0%. Actually, I'll pull it up too for fun. So yeah, it's not gonna work. It's just not gonna work how I want it to. Dude, it really doesn't want to work for me. Okay, it really is 0%. I kid you not. If you make under 48K and you receive a long-term capital gains, it's 0% tax. Kind of cool. Okay. So, speaking of good ETFs, kind of getting off topic there, QQQM is my favorite way to get exposure to the NASDAQ 100. This is the exact same theme as the normal QQQ, just with the lower expense ratio. Here are all their holdings, Nvidia, Microsoft, Apple, Broadcom, Amazon, Meta, Google, Netflix, all stocks, I would happily own individually. If you don't buy this ETF, please own some of the stocks in here individually, like Nvidia, Apple. There's a reason all the super investors own this kind of stuff. If you go like Nancy Pelosi, the genius, her largest holding is Apple, then Amazon, then Google, Salesforce, Microsoft, Nvidia, Netflix. It's that way for a reason. If we go to Warren Buffett, his largest holding is Apple. Like, if you don't own the S&P 500 or QQQ, you can't outperform it. Like, what you need to own it. Can you look at, we just looked at P&G a little bit ago. If you give me a minute, we'll get to Kraken Robotics later. But yeah, we just looked at them. That's that Canadian robotics company. Palantir, let's do that one too. PLTR. Is there an ETF for Nancy Pelosi? I actually don't think so. Here's a cool thing. On this app right here, I don't think there's a ETF that tracks Nancy Pelosi, but you can like literally on this brokerage, you can set your weightings and everything. Batch trade, follow her into her positions, or really any of these. You can see the Soros holdings too. You can see all the like super investors. Literally by SEC law, they have to make all their trades public. So as soon as they're made public, we can literally see the exact transactions and all that stuff. Anyway, what app is it? Oh yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's actually a brokerage where you buy stocks on. It's an affiliate link too, full disclosure. It's free. You don't have to deposit anything to see this information, but if you want to buy stocks in here, if you go and deposit $100, we'll both get some free stocks. My favorite brokerage. But let's see. Let's keep going. Do some more analysis here. I wanted to look at Palantir. Here's some cool features. Using this brokerage, we can analyze stocks with. We can see where the revenue comes from. So for Palantir, 55% of all the revenue comes from the government. A lot of police stations, the military, all use their software. Check out how growthy it is. Like, this is what's crazy. The revenue's up 49 after it grew 23, after it grew 15. Like, the growth rate is growing. So the revenue's at a record over there. And also, not just the government revenue, but the commercial side as well. The commercial revenue is also up 46 after it grew 32, after it grew 10. So the growth rate's growing. They're beating on expectations. They literally did exactly $1 billion of revenue. Out of this $1 billion of revenue they did, $330 million of it was net income. The highest net margin ever. They've never had a 33% net margin before. They literally have no debt. I mean, this is a monster. I'm talking monster balance sheet right here. Literally $6 billion of cash, up from $4 billion. No debt at all. No debt on the books. I mean, that's such a huge safety net. Gives them tremendous freedom. So I just really like Palantir. But bad news, Palantir, they're ridiculously expensive. Like, they're trading at like 120 times revenue. It's like same with Tesla. Tesla's really expensive, and Palantir. I do not have any Palantir, but I'd love to own them, but at a much lower valuation. Much lower valuation. Why buy ETF? The return is less than single stocks. I'm a huge fan of ETFs. The tech heavy ones like QQQM and VOO. Those are the ones you should do because it's nice diversification away. Because, hey, what up, IDK? Most people can't outperform the S&P 500, even by individually picking stocks, because most people don't know how to individually pick stocks correctly. Judging by the chat where I see a lot of these, like, basically revenueless startups, like, I could never trust, like, real money in these. But I do have some of those stocks, like, where I like them. I know it's speculative, so I just put a couple $100 in them, like PSIX, Super Micro. Like, if I'm going to buy a stock and put my money in them, like, a lot of people just like to buy stocks because they're down on a dip. If I want to buy a stock that's down on a dip, I want to make sure it has good fundamentals. Have a thesis behind why I'm buying it. And this is one I've recently bought on the dip, SFM. I didn't time it too right because I'm down bad on it, but yeah, there's Sprouts Farmers Market. That's a cool one I'm buying. We're down bad on Zoom, UiPath. I love being fully transparent. Actually here, let me just show you our all-time performance. If you look, we're down 4% on the day. Here's our open profit and loss. Since inception, we're only up 19.5%. We've underperformed. So I just like being fully transparent there. But let's keep going. By the way, if you want to hit the follow button, we stream every day. I literally sell nothing. I have no course, book, WhatsApp, Telegram. Please watch out for people impersonating me. I'll never follow you, DM you. Someone said XLV. Yeah, these are like, you can select in certain sectors. Like, this is just the healthcare ETF. So if you like healthcare, you could buy this ETF. Or I like ETFs to like find new companies. Like, here we are in XLV, their largest, it's market cap weighted. I love that. So its largest holding is Eli Lilly, then Johnson & Johnson, AbbVie, Eli Lilly. These are great. Then it's UNH, Abbott, Merck, TMO. So yeah, all the top healthcare stocks by market cap. UNH has probably held it down, but It's come back a bit. Down 7% today. How I feel you, EB. Yeah, our risk on account, we were down 4% in here. I actually have a different goal with each portfolio. Look at, a whole page of red here on my watch list. Qs are down 2.5. Dang, Qs are down even more. No, let's hope the bottom is in for the day. Bonds are up well, though. If we go to our main portfolio right here, by the way, if you look in the very top left, this is called our dividend-only portfolio. Every stock in here pays a dividend, so I have like different goals with each account. And look, the only green stock on the day is McDonald's, recession resilient. McDonald's is green on the day. Anyone seen the new McDonald's Monopoly stuff? That's pretty cool. But yeah, this is right here our risk on account where we buy really risky stuff, down 4%. And then this, our buy and never sell account. Have you seen what's causing that to dip? Yeah, more tariff fears. China and US tariff escalation stuff. So I've been underperforming the past market, but Rocket Lab have exploded the past 2 months and I'm well up. Yeah, dude, Rocket Lab has been insane. I wish I bought them. Sprouts Farmers Market is a beast. TTW. Oh, yeah, hey, that's the GTA 5 company. Or yeah. Actually, we'll pull them up right here. What about West Waters? Hey, I don't know. Hey, if you got a stock you want me to look at, give me the ticker symbol. I've never heard of that one before. Maybe we'll check it out though. Anduril is the next Palantir. I don't know what that, dude, this is not one to load for me. TTWO. I might have to reset. Okay. Well, that's all right. All right. TTWO. What's the trajectory on Meta? Oh, dude, I'd love to look at Meta. We'll pull that up too. Man, there we go. Sorry, my Wi-Fi is terrible today. Oh, well, it says, okay, please. All right. It says we're in the green now. Okay. Here's Take Two. This is the company that owns Rockstar Games. So if you've heard of, GTA 5, Red Dead Redemption, this is the company that owns it. And the reason the stock is at an all-time high pretty much is because they're about to release this game called, as you've probably heard of it, GTA 6. And as soon as they release that game, that's instantly billions in revenue. They're going to bring in so much future revenue. So, and as you know, the stock market is so future-looking. So that it's really anticipated all that revenue that they're going to capture whenever they release that game. And that's why I don't think the risk reward is great on this one, because I think everyone at this point knows about it. And the risk reward doesn't look great on this one. But they're at all-time highs. They own GTA 6. If you still want exposure to GTA 6, though, this is the way that's the only way to do it. Keep buying McDonald's. Yo, hey, what up, Jim? Yo, I've been doing the McDonald's Monopoly. Hey, nice, Daniel. Me too. I did it this morning. I have one share in G&W. Hey, what app is this? So, hey, if you want to get this software I'm on, it's in the link tree in my bio, the very first link there. Let's see, GNW and JD stock. Maybe we'll pull up JD. I think that's that Chinese retailer. Those do terrible. The Chinese retailers. I think JD's we'll maybe check them out. So here's Genworth Financial. So yeah, 2008 still hasn't recovered from that. Let's go look at their numbers though, because they've been doing all right the past couple of years. So long-term care insurance. So it hasn't been too growthy. It's actually, if you average it, I think it's been negative, annual. Yeah, look at it on an annual basis. It's kind of declining single digits. Life and annuities. Let's hope this also isn't declining as well. Well, actually, maybe we won't try and pull that up. But yeah, here's the thing investors probably just aren't happy about. This doesn't beat inflation. Revenues of 1.5. It was down 4%, down 6%. And they're at least they're still making net income every quarter. That's at least good news. They're still making money every quarter. But we want to see the growth come back, I think. So let's look at Meta right here. Yeah, I love Meta. So what up, Caden? So Meta, in my opinion, is a great never sell. If you're like me and have the intention to never sell Meta, it's worth buying and worth dollar cost averaging right now, even at this price. I think it's an $800 stock, easy in the long run. Even right now, they're only traded they're only trading at 25 times PE. Again, PE is just net income plus any share buybacks or dilution, but they're trading at 25 times net income. This is what's crazy. Their active users are 3.48 billion daily active users. You know, they own Facebook, Instagram, WhatsApp, Threads now. Did you know Threads now has the same amount of daily active users as X does? And also they have the new Ray-Bans. And check this out. The number one key event there, it says Meta Ray-Bans target 10 million AI glasses production by 2026. You know, if they sell each pair, 10 million pairs each at a couple hundred each. Instagram explores dedicated TV app for real expansion. Whoa. What app is this? Yeah, hey, by the way, if you want to get this app, this is a Brokerage. It's in the link tree in my bio, the very first link there if you want to get this app I'm on. But yeah, I love all the apps that they own. They've been beating on expectations every quarter. They're expanding margins. Like, this is a $2 trillion company with, look at this, net margin, 40% net margins. You know, you go spend $100 on Facebook ads, $40 of it is net income for them because, if you go on YouTube, whenever YouTube makes money, 45% of it goes to me as the YouTuber, and Google keeps 55%. But on Instagram, you don't make money. Instagram, just whenever you see an ad on there, none of it goes to a creator. Instagram keeps 100% of the revenue. So they're printing net income. They just now introduced ads to WhatsApp as well. So that's going to be a huge earnings tailwind for the company. Looks like they're doing something with Instagram Real TV. They just have they have the new AI glasses, the Meta AI glasses, where you can scroll through all the Meta apps on there. Anyway, Meta's a never sell stock. They are losing on their AI a little bit. I like the glasses, but their LLM, like Llama or whatever, I don't think it's that good. I like Google Gemini. Meta needs to open Marketplace to people who don't have Facebook. Facebook Marketplace is a huge lost leader for Meta, and it's like one of the best contributions to society they've given us, the Facebook Marketplace, because they don't make any money on any transaction you do on there. And it's helpful to check. Okay. Can you check? I was smart enough last year to pick Rocket Lab, but it was $4. Oh, you must be doing great. Oh wait, Red Rock Resorts. I don't think we'll. Can you check? I can't see if they're doing good. This hasn't loaded yet, but I'm gonna guess it's doing terrible. This is Red Rock Resorts. Let's see. It's actually not too shabby. Actually, better than I thought. It's doing better than Wynn Resorts. It's doing better than MGM. It's doing better than Caesars. This might be a hotel. Let's see. Yeah, so Las Vegas operations. Let's just go to net income down here. Wow, they're actually making good money. At least this looks better than Caesars and MGM. 80 mil a quarter. That's not too bad. I did hear that tourist travel at Las Vegas is slowing a little bit, down 7% year over year. But look at this. You get a nice 1.8% yield. Basically, this is your Vegas play, we'll call it. Oh my goodness, I'm not AFK. Okay. All right, we just had to fill out a captcha on TikTok because I thought I was AFK. All right. Is TTWO worth it? I don't think the risk reward looks good on take two. Yeah. JD, please. Yeah, hey, this one they're nothing really good here. I mean, they're the same price as they were back in 2014. So you bought the stock 10 years ago. You're down on your position. Did they just start? I think they just started paying a dividend, I think. Let me check. Do they pay a dividend? Yeah. Okay, nice. Yeah, 2023 is when they started it. Actually, that is good news. You get a 3% yield here, so that's good. But their margins just fell a bit. Actually, maybe this was a one-time adjustment, but the operating profit went negative. Their margins fell a little bit. Anyway, I like the growth. If we just go to revenue growth, up 25%. This thing can never trade at a high multiple because it's Chinese, and the retailers specifically in China just don't do good. The certain is it QQQC? The reason these or is it CQQQ? The reason these certain China tech ETFs do so good is because they remove the retailers. Here it is, Invesco China Tech ETF. With the China escalating tensions, no wonder this is down 7.3% on the day. But yeah, Tencent, dude, best Chinese stock of all time, dude. I would not financial advice, sell all GD and buy Tencent if you're a gamer. Oh, speaking of take two, If anyone likes investing in video game stocks, this one's your best video game play out there. If you didn't know what app you're using, yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a software where you get stocks on. It's an affiliate link too, full disclosure. If you deposit $100, we'll both get free stocks. But look, this stock is Tencent. They literally own Supercell. So if you heard of Clash of Clans, Clash Royale, this stock owns it. They also own Riot Games. So Valorant, League of Legends, they own it. They own 49% of Epic Games, and Epic Games owns Fortnite. So they own 49% of Fortnite in the whole Epic Games store. They own PUBG. Like this is, if this was a Mag, that would be a Mag 7 company if it was US. Okay. Okay, wait, ARKX. Is that the space exploration? You know, hey, speaking of applesauce, this one might have Rocket Lab in it. Let's see. So, largest holding is Kratos, and then Rocket Lab, Archer Aviation, Teradyne, Palantir, Trimble, AMD. So, yeah, this one's definitely done better than her main ETF. It's at an all-time high today, or not today, but it's done pretty amazing. They do though, because they can show you ads on the marketplace. Oh, that's cool. I didn't know that. A1 stake. I didn't know that. Let's see. CFLT, Confluent. Yeah, hey, we'll try and get to Kraken Robotics. So here's Confluent. Let's see what this is. So they have sales. That's great news. Revenue's up 20% after it grew 25, after it grew 35. So revenue's growing nicely. They are still losing money. You know, 80 million in net income a quarter. Not great. But analysts expected that. They lost more net income than analysts expected this quarter. That might explain why the stock has been flat since IPO, just because they aren't making any money. They're losing 100 mil a quarter. Like that's not, or close to that. It's not great. But they are growing their sales way to do like, but I just don't like touching the revenue list stuff, or the ones that are losing a lot of net income. Like it'll still probably take them a year, 2, 3 to get profitable. So do you think Futu's a good buy now? I do use her for 4. You know, and I do own this one. If I wanted to make Futu like 5% of my portfolio, I would not make it 5% of my portfolio today, but maybe I'd make it 2% of my portfolio today. Like they're down at 10.5. Again, I fundamentally great stock. I love them. What app is this? Yeah, hey, again, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio. First link there. Okay. TSM, please. Taiwan Semi, dude. If you didn't know, Nvidia just designs the chips. Nvidia designs their chips, but Taiwan Semiconductor actually makes them for them. So it's like a way to get exposure to Nvidia with a much higher dividend. You're like, even though this stock is pretty close to all-time highs, you still get an over 1% dividend yield. So pretty good. And if we go down here, why is Futu down so much? Yo, that's just because all the fintechs are like Robinhood's down 6, SoFi's down 5. All right. You know, the whole market's down today from the China tariff stuff. But back to Taiwan Semiconductor, yeah, that's why Taiwan Semi's down 5%, because if you go to where the Taiwan Semi's revenue come from, you know, 12% China, Taiwan, you know, US is 68%. But here's what I love about Taiwan Semi. I would absolutely love to own this company for the long run. They have a huge market share for these wafer chips, 67% market share, up from 61%. But the best part about this company is how growthy they are. Look at the revenue. The revenue's up 54%. And the net income is up by 79, which means they expanded margins. I can't believe this. Net margin went from 36 to 42. So when your net margin goes from 36 to 42 and you do 30 billion of revenue a quarter, that adds so much to your bottom line. It's insane. They're easily doing over 10 billion in net income a quarter, after tax net income a quarter, plus they share it with you. They get a 1% dividend. They do share buybacks too. Taiwan's a never sell. Like, that one I approved. ASML too. ASML is a good one. What is there a risk to buy at all-time highs? Actually, statistics show that even buying at all-time highs, you still it's worth it. Especially if you buy the right stuff. You know, if you buy the S&P 500 right now at all-time highs, or again, not all-time highs because it's down on the day, but if you buy it right now, you still should get that 7 to 8% CAGR a year. Again, when stocks, this isn't get rich quick. You know, in my opinion, that's not how you should do it or look at it. You should look at stocks as like to build to preserve and slowly build your wealth. You hope for an 8% CAGR. So that means you double your money every 7 years, but you turn $100 the first year, 100 into 108, but then you compound it, 108 into 120, then 120 into 150, and you snowball effect it. And especially as you deposit more and get your 8% returns, your portfolio value should just skyrocket. Time in the market beats trying to time it. So someone said Novo Nordisk. Yeah, hey, this is your weight loss play. If you've heard of Ozempic before, Wegovy, Elon Musk is on Ozempic. This is the stock that actually owns it. So if we go to where the revenue comes from, 93% of it is their diabetes and obesity care products. So again, Ozempic, Wegovy. This is an EU company, so they're seeing some increased competition from Eli Lilly. But the reason the multiple is so industry low, like industry average is 24, the reason they are trading at 14 times net income is because they actually lose their exclusivity for Ozempic in about 3 years. So that's not great. Their main product, Ozempic, lose exclusivity for that in a couple years. They're also seeing some increased competition from Eli Lilly. But for right now, this is why I like this one right now, that the numbers are good. Like they're easily making over $4 billion net income a quarter, 3.2% dividend yield, safe dividend. But I think like the risk reward is pretty good because the risks are mostly priced in, I think. So that being said, I would not have this as a major size position. But I would maybe nibble on it. It's kind of like a pure play weight loss, like a smaller Eli Lilly. Eli Lilly would be the better version because, this is their main competition. The main competition for Novo Nordisk is Eli Lilly. If we go to their products right here, they literally just created this Zepbound. This is their weight loss prescription. They literally created it in 2023. And now it's 18% of the entire company. Now the sales were 2.3 billion, up 350% year over year. This is another insane weight loss play. Okay. Elon takes Ozempic is an investing strategy. Oh, Adrian, you're funny. Which is the best? Wait, what's up? I don't know. Best brokerage or if you want to, this is my favorite brokerage. If you want to get it, it's in the link tree in my bio. First link there. Someone said, "Do you have a Telegram?" No. Please watch out for people impersonating me. I'll never follow you. I'll never DM you. I have no course, book, WhatsApp, Telegram. I don't sell anything. So, please watch out for people impersonating me. Okay, we'll look at a few more here. Unemployment up, stocks up. Do you see a recession coming? Maybe. AI is really like definitional recession is 2 declining GDP quarters. AI is really, really propping up our GDP numbers, but like we could be in like a jobs recession soon. I'm going to be a little overly optimistic right now and just say no. Rumors are Eli Lilly is interested in acquire them. That would be too big. That couldn't happen. They're already. That couldn't happen. I wouldn't think that would happen. Just because Novo Nordisk or Eli Lilly already has a great weight loss prescription and they're working on a weight loss prescription pill because it's an injection right now. It's an injection. They're working on a pill right now. Are you holding all of your stocks long-term in all 3 portfolios? Well, yeah, I do have a lot of long holds in every portfolio. This one right here is I sometimes swing trade in here. Sometimes I'll buy stuff and then sell it a week later, month later, whatever. But in this account right here, if you look at the top, it's called buy and never sell. Once I buy a stock in here, I pretty much never sell it. Or once I buy a new position, I have to hold it at least for a year. Can't sell it. And actually, I rarely ever do anything in here, and I bought a new stock today. Ticker symbol MUSA, Murphy USA. So yeah, I never trim any of my positions. I never take profit. I'm just diamond hand in this account, but I have other portfolios as well, of course, like my Robinhood account. We're down 1.2% RIP. McDonald's is our only green guy in here. So, okay. Viking 2. Oh, are you talking about Viking Therapeutics? Oh, is Viking Therapeutics a weight loss play? I wonder. Okay, so anyway, I hope y'all have a great rest of your day. Have a great Friday. I might actually stream in a couple hours from now. Matthew said thoughts on Race. Hey, I'm actually about to make a whole YouTube video about Race because I actually just bought them for the first time ever yesterday, and we're already down 5% on them. So yeah, there's Race. I do plan to buy more in there. But anyway, before you go, make sure to hit the like button, hit the follow button. We stream every day. If you want to hit follow, we just look at stocks. I sell nothing, no course book. And best way to support me, number one way to support me, more than donating, would just be subscribe to my YouTube channel. I'm trying to build up my YouTube channel. I'm streaming on there as well right now. So if you missed anything, I would just appreciate if you watch the stream from YouTube, but you can rewind it because sometimes I talk too fast. I'm sorry. And you can watch it from the beginning because the beginning of the streams are really fun. So anyway, hope you have a great rest of your day. What happens? Oh yeah, hey, if you're interested in stocks and want to get a brokerage, you need a brokerage to buy stocks on. This one I'm on right now is my favorite app to buy stocks on. So yeah, if you want to get it, it's in the link tree in my bio, the very first link there. This app I'm on. A lot of people just like to keep their idle cash in here. That's what I do because it's free. I have $975 of cash, earns daily interest. So better than a savings account, but I just love all the tools you can do on here. So yeah, that was the stream again. Actually, let me check this real quick. There's a lot of cool stuff you can see on here, like all the investment themes. If you're looking for certain like sectors, new sectors to find, they got all of it on here. So yeah. Hey, sorry. Oh yeah, hey, we actually looked at Kraken Robotics 2 times on the stream, so sorry I didn't get to it. But hey, see you later, Adrian. Hope you guys have a great rest of your day. Sorry we couldn't get to Kraken, sorry. All right, see you guys. Have a great rest of your Friday. We'll be live later. Have a good night. Hey, you too, LMT. See you, Applesauce. See you, Timothy, A1 Steak, Raf. Shout out to Maddie for the 25, Ron on the YouTube stream earlier. Shout out to Ronnie. So, hey, see you on the next stream. Thanks for being on the YouTube stream. And